Okay. Well, I didn't think the day was going to end this way, but it sure did. And it is bloody. Definitely blood on the streets right now. Everything was looking great. Everything was looking great for a minute until all hell broke loose. What are we looking at here? Are we actually going to close? Like, can we please close green on the Qs? I mean, God dang it, man. That was just crazy. Ooh, let me switch up the camera angle. There we go. Yeah. I don't know, guys. This is not how I want to start my weekend. Not how I want to start my weekend with a massive fade on this. We're up as much as, how much are we up on here today? Jeez, man. I wonder if a lot of stuff are still green today. We were up as much as 1% on the Qs. And now today, woo, that last like hour, I went to get Starbucks. What happened? Should I have not gotten Starbucks here? Not gonna lie, I kind of need the Starbucks. Yeah, Amit had another haircut. My name is Amit Kogreja, whatever his last name is. Someone had to do it. Someone had to do the market close. And it is just brutal. Amazon basically went red. Microsoft went red. Google was already red, I think, the whole day. Apple's been red the whole day. Meta's been red the whole day. Wow, hold on a second. Was Apple? Wow. That would be crazy if you were short an Apple. That would be crazy. But yeah, guys, this is not looking good heading into the weekend. Not looking good. We couldn't even recover the 100-day moving average on the Qs. I might have to open up some hedges coming into this weekend. We will see. We will see, guys. I mean, crypto bounced, right? So that's something good. And it doesn't look like it's letting loose over here, but it's still a massive downtrend. Ethereum, still a massive downtrend. Robinhood bounced, but I mean, this downtrend just does not look good. AppLovin had a little bit of a bounce, but like, look at that crazy downtrend. On Semi, my little boy is still doing good. Amcor, come back to test the 50-day. I hope this doesn't break down. That would really suck. Verizon is, I mean, how can you argue with this chart? This isn't all-time highs, but this is 52-week highs right here. Zeta, it's still a massive downtrend. Nebius looks a lot better, but it would be nice to actually close above this 100-day moving average. I don't think these memory stocks are topping anytime soon, so we'll see. ACLS up. I could talk a little bit about that one later. I'm going to go over the Applied Materials earnings and talk about why this is bullish for ACLS Technologies, which I think that they actually report earnings on Tuesday, and I'm very bullish coming to those earnings. SkyT is almost back $30. We'll see with that one. Centrus Energy is back up, but I mean, this is a pretty nasty breakdown below the 200-day moving average. Palantir is back in the 130s, but I mean, you can't call the bottom on this. I don't know anyone who should be calling the bottom on any of these software stocks. Looking back at the entire software ETF, I mean, you're up about 1.5%. You're beating the semiconductors right now, which is the reason why Nvidia is very weak today. Kudos to Paper Gains for shorting Nvidia. Yeah, kudos to that dude right there. So, I mean, you're having a little bit of a bounce with the data center stocks. So, like, this isn't an all-out red day or anything. It's just mostly with the Qs. And, yeah, the Qs are now 5 basis points now, testing the lows of the day or getting close to the lows of the day. You have your semiconductors over here. Lemonade is down. Oh, sorry, the small caps over here. Lemonade is down. And what? Well, there you go. There you go. I thought it was a little bit different that that Grab was green yesterday, but here we are back again. Grab is red again, down 5%. So that just basically gave up all of those gains right there. DigitalOcean is at a new 52-week high. This is an interesting one because this has to do with a lot of the networking architecture, especially for content delivery network, which means bringing all the compute closer to you and caching it. So that way, whenever you use an LM for inference, you don't have to go all the way out there. It's the same thing with Cloudflare, but on a much smaller scale. But DigitalOcean is a much smaller player. I believe they're a $6 billion company. So, I mean, we'll see what happens to that one. I think they're a little bit too big of a market cap to turn into an acquisition. But we'll see with that one. I mean, I still do think that there's a reason why this stock is just ripping higher, even though the market is pulling back. So yeah, software did bounce a little bit today. Cloudflare is at 195, so still holding onto those gains, trying to close above the 200-day moving average over here. But overall on the markets, this isn't like it's bearish for tech, but the RSP is near an all-time high. Okay, so if RSP or the broad, the equal weight S&P 500 is at all-time high, that means you're having broadening out. So people are rotating out of tech and getting into the X Mag 7 or X tech stocks. And that's really what you're seeing when you're looking at SP 500 sectors, right? So healthcare is up today, staples is up today, industrials is up today, materials is up today, energy is up today, utilities up today. Utilities actually is arguably a defensive sector. So seeing this go up isn't necessarily a great thing. So is real estate. Real estate is a defensive sector as well. Communications is down. This is mostly Meta and Google, so that's going to be down for sure. XOK is Microsoft, Apple, and Nvidia. XOY is Tesla and Amazon, so it's the reason why those are red. Financials turn red. You know, when it comes to financials, you don't want financials to lead the way down. That's actually pretty bad for the economy, so it could be signaling something there. Need to listen closely to that one. But, I mean, besides that, we had the earnings yesterday. Applied Materials is up 8%. AMAT is up 3%. That did give up a lot of the gains, which is very surprising to see. Still above the 100-day moving average. Toast is crazy. Toast was down like 15% yesterday after hours. Has recovered, but gave up a lot of those gains, as you can see over here. Coinbase is up 17%. I think a lot of this has to do with Bitcoin, and this is a massive downtrend, so I wouldn't get too excited about that one. Rivian's up 28%. This is a crazy move for Rivian. Let's see if it holds this spot, but this might have just flipped bullish over here. And it's likely that the EV market has actually bottomed. I mean, Tesla isn't falling off a cliff here. The chart doesn't look great, but it is not falling off a cliff. But Tesla always trades richly, so it's mostly driven on sentiment, and it is a mega cap. What is this, 1.5 trillion? Yeah, so it is going to move with the markets, right? So let's see. Are you up? I mean, if you're up today, congratulations. That's a very good thing if you're up in the markets today. What is going on? Natural grind. Ahmed did have a haircut. My name is Ahmed Kugraja. No, just kidding. Had to do it. Someone had to do it. Someone had to do the stream for the market close, right? We got to make sure we're closing the markets. It would have been nice to close the markets when they're still green. Oh, they're still a little bit green. It's like flip-flopping over here. Actually, Qs are down 13 basis points. We'll see. Where's Ahmed? I have no idea where Ahmed is, but he said he wasn't coming today, so someone had to do it. All my Mag 7 are red today. Are they all red? Are they all red? No, Netflix is up. Tesla's up. Slightly up. They're pretty much red. What's going on? Midwest, how are you, sir? And just saying hi. Oh, that's a lot of people joining. Thank you, everyone, for joining the stream. Really appreciate you hanging out with me for the rest of the day. We have Steve. I'm going to try to get Steve on a little bit later today, and going to send a message out to see if anybody wants to join the stream today, give their idea and speculative glasses on the stock market. Wow, congratulations. That's actually really good. Probably a lot of software. Yeah, I know. He's in New York City. I don't know what he's in New York City for. Maybe he's recording a new episode of his show with Steve, actually. But then that'd be interesting if Steve comes on here. What's he doing? I don't know. Pretty sus. Yeah, last minute sell-off, Tesla groupie. I hear pretty brutal. What's up, girl? How you doing? CPI. You know what? We're going to get a little bit of CPI. I did have a clip that I wanted to play regarding, hold on, where is my thing? Yeah, regarding hold on, Scott Bessent was actually interviewed this morning on CNBC. I want to play a couple of clips on there, so I'm that for you guys. We did get CPI this morning. CPI this morning actually came in cooler than expected, and that's generally good for the market. But my argument is that if it really is bullish for the market, why is tech down? Why did tech fade the entire move? Shouldn't tech propel up? I was actually hoping that Qs would be able to recover the 100-day moving average, but like it just did not, right? So tech still continues to remain weak. We will see what happens with that one. Are we bullish on Hood yet? I mean, I'm still bullish Hood, but I'm not adding here. Maybe yesterday was the bottom. Who knows? But my cost basis in that is like $30. So I don't think I want to add to it over here. I think there's better opportunity in the markets. Did open up 2 positions earlier this week, Silicon Motion, SIMO, and ACLS. ACLS Technologies, and I'll go a little bit over that when I go over the AMAT earnings or applied material earnings. Yeah, yields went down. But the market didn't like it. So my take on yields are that, let me actually share the screen with the yields, and then I'll get into the next order of business here. I got my economy tab on trading view over here. Yep. All right, so these are the yields that I have over here, and they came down dramatically, but the long end came down. Actually, the 2-year came down even more, but yields are generally down, right? So what does this mean for the market? I do think that when it comes to yields, you don't want volatility in the up or down direction with yields like this much. Like this is a pretty big move, right? So I would say that it is a massive trend reversal. So like we actually topped earlier last week around here, and then we kind of bounced, and then like we came back down. So yields are coming down, which means bonds are going up, and bonds are generally a flight to safety. So when that happens too quickly, the market isn't exactly bullish it, especially when you have a new Fed chair that's likely to come in. How are you positioned at the moment? Cash, I'm mostly fully invested. I might have like a couple of percentage points of cash, so nothing too crazy, but I'm mostly fully invested right now. I haven't really decided to hedge the market lately, mostly because it doesn't really look like things are about to break down, but I don't know. We'll see. Maybe I might hedge toward the end of the day. I got to look at some charts while I play this video, so I will take a look. All right, so I'm going to play this clip for you guys. And I got a couple of parts of this clip that I want to play. I wanted to play starting at 3 minutes where he's talking about Kevin Walsh. And here we go.
With a special guest.
Where?
All right, yeah, so this
people were stealing from the federal government, then donating back to politicians.
Mr. Secretary, let's shift gears to something everyone's watching closely. Obviously, Kevin Walsh, the president would like to have him confirmed in a timely manner, and there are some obstacles. In one, Senator Tillis, I think you proposed, I guess you'd call it an off-ramp, some type of an off-ramp if the investigation would move from justice to the banking committee. I can't tell. I'm looking at what his comments are. He says, well, yeah, we could certainly have some type of investigation, but that would not replace the investigation for the DOJ being, that needs to be dropped first. Do you know where we stand on that, how this is going to play out?
Yeah, again, Joe, the administration has no influence on what the U.S. Attorney for D.C. does. What I was proposing was that the Senate Banking Committee also investigate this very large overrun on the Fed construction project. We'll see where the investigation goes with Jeanine Pirro's office. There were subpoenas issued, but that doesn't have to mean that there are charges. They reached out to the Fed in December via email, didn't get responses, and then issued subpoenas. So we'll see what the state of that is. I think what's important here is that at this, I spoke on Tuesday at a Republican Senate working group, and what I think is important, my understanding is that we are going to proceed with the hearings. Senator Tillis wants to keep a hold on any vote with Kevin Walsh leaving committee, making it to the full Senate. But I think it's important to get the hearings underway, and I think we have an agreement to do that.
Do you, I think Senator Scott has weighed in as well.
What we have over here is that, kind of give a little bit of an update as far as the nomination for Walsh. There's a DOJ investigation, so it's making things take a little bit longer. I would say that the markets are kind of getting a little hesitant or impatient as far as bringing Walsh in. That might be bringing the volatility that we have here because of the uncertainty. So the other candidate is Judy Shelton. She's probably the runner-up candidate when it comes to poly markets. She's running at 5%, and Walsh is at 95%. And the thing is that I don't think the market wants Judy Shelton. Judy Shelton is not exactly someone you want for dollar depreciation. She does want to peg the US dollar back to gold. She does want to shrink the balance sheet, but a lot more dramatically. And she also does not think that we should be cutting rates. She thinks that the inflation target should be 0%, not 2%. It's a little bit wonky what she's actually thinking about doing. But it's possible that the uncertainty around Kevin Warsh could be bringing instability to the market. Now, Warsh did kind of give back a little bit of what he was saying, where he wants to shrink the balance sheet, or what he said in the past. And the thing is that when you shrink the balance sheet, that means you're no longer doing QE anymore, and that means you're no longer turning on the money printer. If you do that, the market isn't really going to like that. We basically had the money printer on for the last 15 years. Or set more than that, 18 years, 17, 19 years. And if we turn off the money printer now, it could somewhat reverse the dynamic of the stock market. We stopped the money printer in 2021, and we know what happened in 2022. And then we restarted it recently, but we arguably started cutting rates and ended the rate hike cycle and so on. So the market was kind of forward looking with that. Now we're kind of in the picture where maybe we're pivoting the other direction when it comes to easeful monetary policy. Maybe we're going to start having a tighter monetary policy environment, which isn't so bullish for tech, isn't bullish for software, which raises a lot of debt, isn't so bullish small caps and high beta, because these pre-revenue companies need to raise a lot of debt. And if you don't turn on the money printer, even though you are cutting rates ever so slightly, the market looks ahead of that and it says, like, well, if you're no longer going to cut rates, and if you're going to start shrinking the balance sheet, that means that money isn't necessarily cheap anymore. Money's starting to become expensive to borrow, because then at the end of the day, everyone borrows money. But if your companies start to have a little bit of weariness with borrowing money, that means they're going to start slowing down their growth and start tightening their wallets. And if that happens, that could hurt margins, that could slow down growth. So that really is generally the worry about who could be the next Fed here. Now, the market did think Warsh was going to be that person, but then he's starting to talk about opening up some sort of other facility that's going to fund the government through printing at the Fed. So maybe he isn't talking about shrink the balance sheet. Maybe he is, but he's actually printing money in the background. I wouldn't be surprised if that starts happening. So the issue now is Warsh going to be the governor? I'm sorry, is Warsh going to be the chair or not? And that uncertainty is what scares the market. Not so much the surety of him becoming the Fed chair, but the fact that it's uncertain if he will. And that's where the market is kind of unsure about. Also, we don't know definitively if he actually is having these type of policies in the market. So we'll see. Now, when we talk about crypto is still falling off a cliff. I don't think that crypto is done going down yet. I think that if we still continue to have this uncertainty, crypto will likely press down lower. The thing is that how much lower can it go? Well, we already dropped 50%. So maybe if we drop down lower, it won't be as dramatic as it was the first round, or maybe it won't go up, right? I'm just saying that I don't think crypto is the best place for me to be right now as far as risk and rewards go. I mean, you're really kind of betting on a bottom if you're buying crypto over here. Long term, it shouldn't matter. Like if you're buying crypto for possibly the next 10 years, like it doesn't really matter. Whether crypto's going to go down or up, you just want to add a key levels or just dollar cost average. I know some people that dollar cost average like $100 a month, which is fine. But the issue is that crypto moves in correlation with global M2 money supply, aka money printing around the entire world. And we might be slowing down a little bit. And that's a little worrisome for crypto. And especially if we get Warsh and he does shrink the balance sheet, then that definitely is not good for crypto. And the issue is that we're uncertain whether it's going to be Warsh or Judy Shelton. And even though Judy Shelton's 5%, there is that uncertainty there. And that's what kind of makes the market, I'm a little iffy right now with software and tech right now, right? And that's the reason why you're seeing all these other sectors running. Someone said Nebius is running. Not really. I mean, it's still floating near the highs of day, which is good to see. Yeah, so let's take a look at what Scott Bessent has to say about crypto, because he did have some commentary on that one. Let me just move this clip over to 24 minutes. All right, I will start it here.
Had nuked the filibuster, but they refused to go along with it. And guess where they are? They're both sitting at home now, hopefully watching your show. And I think the Republicans need to be smart about this. And I think that maybe the filibuster doesn't get withdrawn for everything, but there are things that we've got to do, like voter integrity. And we've got to keep the government open. I mean, look, we are on the verge of another government shutdown, and the Democrats think this is the way to hurt President Trump, but they're willing to hurt the American people. We had the biggest or the longest shutdown in history. The economy still did great because all the initiatives we put forward. But I think that we have to get on with the people's business, and if the Democrats shut the economy down again, it is a sign that they are bad actors. They don't care about the American people, and we ought to move forward, not let the government shut down, have voter integrity, and many other of our signature issues.
And I thought of one more that while it's not quite a half hour yet, which I really appreciate, Mr. Secretary. Crypto bills moving forward, Bitcoin, a little bit dicey here at this point. You wonder about the leverage in the system. Any comments?
Yeah, Joe, the history, if we take Bitcoin as a proxy for crypto, Bitcoin has a history of volatile movements. We went back and looked. I believe the average sell-off has been about 58%, and we're coming into that zip code right now. And crypto holders are mostly in it for the long term. They are used to the volatility, so it's important that everyone knows what they're buying. But part of the volatility here is self-induced because, and this is one thing where there has been a bipartisan working group and Democrats. There is a group of Democrats who want to work with Republicans on getting a market structure bill. It's called the Clarity Bill. But there are a group of crypto firms who have been blocking it. They said, well, we'd rather have no legislation than this legislation. And that doesn't seem to have been good for the overall crypto community. So, in a time when we are having one of these historically volatile sell-offs, I think some clarity on the Clarity Bill would give great comfort to the market, and we could move forward from there. So it's very important to get this done. And I think if the Democrats were to take the House, which is far from my best case, then the prospects of getting a deal done will just fall apart. I mean, look what the Democrats did to crypto under the Biden administration. It was almost an extinction event, and President Trump has worked to make the U.S. the digital asset capital of the world. There's a lot of innovation that goes on adjacent to crypto in the blockchain, in DeFi. So I think it's important to get this Clarity Bill done as soon as possible and on the president's desk this spring.
Yeah, so I don't know. Here's my rebuttal. You're the Treasury Secretary of the United States of America. Why are you talking about crypto prices? Like, that's kind of weird. I mean, and the Dow's not even a 50K either. So, but like, obviously this administration is very focused on the stock market. And that's like the number one reason why it's kind of hard to be bearish right now, because he is very focused on the stock market. Like, if he wanted the stock market to go up, or if he kept the safe hit new all-time highs every single day, then they'll be doing whatever they can to keep it propped up. And I think there is a reason why he put Kevin Warsh in the seat, or he wants to put Kevin Warsh in the seat. And it's not because he's a hawk. It's because he's going to come up with a deal with them, right? It's just, there is Fed credibility that's on the line if he puts up like a Rick Ryder or Steve Hassett, because they would be a puppet for the political administration. And there has to be a line between those two. The thing is that Warsh is probably not going to be a political puppet, but likely his terms will line up with the administration, but specifically with Scott Bessent, right? So Scott Bessent, Kevin Warsh, and Stanley Druckenmiller was like the trifecta back then. They've all worked on Wall Street, and then they all kind of went their separate ways. Obviously, Scott Bessent is the Treasury Secretary, and he moved on from owning his own hedge fund. Stan Druckenmiller still does manage a family office and still does do a lot of the private markets and the public markets and everything. And Kevin Warsh moved on to being a Fed governor, and then he was involved in politics in the White House and everything. And then now he moved back to being the Fed chair nominee. So the issue is, is Trump going to allow the market to go down? Right. I think that is probably the uncertainty around everything, is that hey, we have a bullish administration, but tech is falling down. And then now we're talking about tariffs, and now we have a Fed. There's a lot going on in the stock market. And really, guys, let me share this chart over here on the S&P 500. We've literally been in lingo since back here in September. We entered the channel, we bounced to the bottom of the channel, we came back up, top of the channel, bottom of the channel, top of the channel, this, right? We've just been playing this game of cat and mouse for the last 5 months. We haven't gone anywhere. But if you look at the RSP basically been straight up, right? So right around the bottom of November, right here was when the RSP just took off. It was when IWM just took off, right? So there is a broadening out of the market. If you look at the Qs since the bottom of November, it hasn't really gotten anywhere. In fact, we had a double top. So the Qs look much worse on the index level than all the other indices, right? And the ones that got hit by the brunt end of the force is software. Just since the bottom, we bounced a little bit and we just came back down, right? Semiconductor is not exactly a different story. We actually bought in November. We've been going up, right? So semiconductors has been the place to be. And that's the reason why I sit most of my portfolio in semiconductors. So yeah, the Dow is at 50K. Maybe it's not at 50K anymore, so they can't really have that excuse. These guys are still going to say it, so whatever. But anyways, guys, kudos for everyone being over here. Really appreciate you all joining. Streaming this from my channel as well as the Wolf channel. If you want to check out some great content, head over to the Wolf Financial YouTube. There's lots of stuff on there. Let me actually share that for you guys real quick. Hold on a second here. Ooh, is this playing over here? Hold on. I'll share it in a little bit, but yeah, go ahead and check that out. I do a lot of the shows on there. This one's kind of a dual stream, but you can definitely check out a lot in there. Actually, Gav Blacksburg did interview recently Tom Nash. Gav Blacksburg is the CEO of Wolf. He interviewed Tom Nash. He interviewed Peter Schiff and a few other people. So there's lots of great content on there. So I would say go ahead and check it out. I will share the link. It's YouTube. Hold on. Let's see here. Here it is. That is the stream for the Wolf YouTube. If you want to check out other great content on there. Okay, so we had a few earnings yesterday. Actually, we had more than a few earnings this week. We had probably, let me actually go over the earnings calendar and I'll go down by one. And let me share this screen over here. We're going to have the market close actually 1 minute. So you know what? Let me prep up for the market close and then I'll go over the earnings a little bit and let's see if Steve's going to be able to join me. So let's go ahead and share. Yeah, this is the reason why I don't do the market close that often, is because I'm not good at it, but also you got your boy AMAT doing it. So I don't want to steal his thunder or anything. And I can't steal his thunder anyways. But yeah, the market just closed over here. SPY is up 6 basis points. So we closed green in the day, which is good to see. But still in chop mode, right? We have not gone anywhere in the last month. The Qs down in the last month, closed near the low. Actually, it closed near the low of the week, right? So this is your weekly candle. We're kind of having a little bit of a breakdown here on the weekly, closed below the 21 EMA for the Qs. Did not have that recovery that I hoped we were going to get today. The Dow Jones is at all-time highs. So, what else can you say about Dow Jones? IWM's at all-time highs. What else can you say? We're not at all-time highs. We're near all-time highs. Yeah, guys, shout out to freaking Nebius. Nebius is just a beast. Honestly, I thought, I'm going to talk about it later, but I thought that CapEx comment on there was going to be we're going down. But there you go. This is why you don't short this stuff, man. You don't short the hot stuff. You don't short the hot stuff. Mega caps. Apple closed down 2.27%. Amazon closed down 43 basis points. Google down 1%. Meta down 1.5%. Microsoft basically flattened the day. This is like the software leader, so it's interesting to see that software bounced back, but Microsoft could not hold on to its gains for the day. It was up like 1% in the day, and they just gave it all back. Nvidia ended down in the day, closing below the 50-day moving average. So that is something to see over here. What about the weekly chart? Weekly chart still looks intact. The monthly chart obviously looks intact as well in Nvidia. So still bullish Nvidia. Nvidia earnings are actually on Wednesday, February 25th. So I will be streaming those earnings, likely going to be on AMAT's show. So we will see with that one. Tesla, I mean, you know, the chart is just doing what Tesla does best. You know, if EV did bottom and solar did bottom, because I do think that solar and EV bottomed, and I don't, for me, those plays would not be with Enphase and Canadian Solar or First Solar and all those other companies, or even the EV companies. My play is the semiconductors that are associated with it, and I'll talk more about that at the end of it. The stock market is now closed. You know what? Hold on a second. I should have done this for you guys, actually, now that I think about it. Hold on. Let me grab something. I got something special for you guys. So let me grab. I didn't mean it to have that Freudian slip when I said grab, okay? I'm sorry. I apologize to everyone when I said grab. I didn't mean to have that Freudian slip. Let's see here. Is this the open? Yeah, no, this is the close. Hold on. I got this. I got this for you guys. I got this one. I got it. Okay, here we go. I already gave it away. I kind of slipped what I said it was going to be, but hold on. I'll play it for you guys real quick just to
We got a lot of earnings to get into, and then we will have Jason on in about 30 minutes, and we will see what he's thinking about the technicals. Thursday, a bloody ugly day in the markets. February 12th, 4 p.m. The stock market is now closed.
Yeah, so the stock market is now closed. Let me go back to what it was. I should have done that actually on the close. I did it last time when I did the open where the show must go on. So the show must go on. We are over here right now. Let's go ahead and take a look at the charts again. Let's take a look at like what's up, what's down. I like to actually do it by this over here so that we can see like what's really moving the markets. Broadcom is down 1.82% today. Vertiv Holdings is actually near an all-time high. So I don't think this is going to be such a bearish setup here. This is like really up there. So we'll see what happens to that one. Top gainers, semiconductors. Wolfspeed is up. This is a company that builds semiconductors and power chips for EVs, guys. There's a reason why this is up 10% today, and there's a reason why this one bottomed shortly after those Enphase earnings, shortly after its recent earnings. It had good guidance. This is solar. Okay, so you want to be in the semiconductors. I would not be in Wolfspeed because they are like borderline bankruptcy a year ago, and their financials are just terrible. So I wouldn't be in it. Applied Materials is a machinery a company that builds machinery. You guys probably already know what Applied Materials. They reported earnings. I'm going to go over this a bit more. $300 billion market cap. This company basically gave a good guidance, beating the upside. They build machinery for memory stocks or memory companies. So that one's up 8% today. Arista Networks reported earnings yesterday. They beat on the top and bottom line, raised guidance. They're up 5% today. They were up almost 20% after hours yesterday. So they give some of that back, but arguably it's still trading near 52-week highs. Pure Storage is green today. I don't know why they're green today, but this is a memory company as well, but mostly with flash memory, okay? This isn't like memory as in DRAM. This is more NAND technology, but they don't even develop themselves. They basically build the entire flash array or storage controllers with a bunch of products that SanDisk sells, Western Digital sells, and so on. Dell is actually up today. This is a server maker. You said Dell, and I believe SMCI was up today too. 39 basis points, not the best, but you had a little bit bounce back in some of the semiconductor ones. Data center stocks were up all across the board. Data centers, neoclouds, miners, and so on, up about 10% today for Nebius. Energy, speculative energy is actually down today. CCJ or Chemical Energy reported earnings today. I didn't really get to check it out, but it was good for the entire sector as far as energy goes. Constellation Energy Group is also a nuclear company. They did have that deal with 3 Mile Island and Microsoft, and they are going to be restarting that plant. It's supposed to be starting up in the next 3 years. Small caps, Alpha was up 9. Why was Alpha up 9% today? That's crazy. 9% is a big move for Alpha. BMNR obviously is up today because Ethereum is up a lot. Aspen is up. Aspen Aerogels. They have to do with the EV market, and specifically one of their largest clients is GM, right? General Motors. So if EVs did bottom, then they could be a beneficiary from it. EOS Energy was up 3% today. Battery technology more catered toward data centers as well. Why in the world was IonQ up 8%? I mean, it's like a hit or miss of this company. I don't think there's really any narrative when it comes to this. It's just quantum computing. That's all you're betting on. Software, DigitalOcean, I mentioned this earlier, is up about 6% today. Cloudflare is up about 6% today. Paycom had a little bit of a bounce back. ServiceNow is up 3% today, but this chart is very nasty. So oh no, we're down, we're down, we're down. Oh, we are so back. Like, I don't think it really works that way, but it would be nice to see a big recovery on that one. Atlassian is still down today. Now, be careful with Atlassian. If it comes to anything that's going to be AI disrupted, it is going to be Monday.com and Atlassian. These are very strong companies when it comes to project management, and anyone can create their own tool and just offboard their Atlassian product. Meanwhile, though, it's not like it's going to happen tomorrow. So maybe there is a bounce, but I am not betting on that one. Confluence being acquired by IBM, I believe, or Costco. I forget which one. Sorry, Cisco. So I forget which one, but we'll see what happens to that one. But they're going to be flat for the rest of until the acquisition, because that's actually going to be happening. Snowflake bounced today. MongoDB bounced today. So data stocks are doing good. Palantir is up 2% today. Still not the best looking chart in Palantir, and still an expensive stock. Look, MongoDB is still expensive. Snowflake's still expensive. Even though they had drawdowns, they're still expensive stocks. But software stocks do have that premium because you have the forward guidance as far as annual recurring revenue, which could be translated into revenue when they build a client. So RPO, reporting performance obligations, is not yet billed to the client. So it cannot be recognized as revenue yet. When it becomes recognized revenue, then it shifts over to revenue, right? So that is what RPO is. And software companies can usually provide that RPO because they sign contracts, long-term contracts with enterprises, right? So you kind of know where their growth is going to go based on the performance of their RPO. If the RPO is up 30%, it's very likely you're going to reaccelerate up to near 30% the next year, unless someone cancels a contract or gains a contract, whatever it is. Cybersecurity. Green across the board. CrowdStrike, the #1 outstanding leader when it comes to endpoint security management, is up 4% today. Rubrik is up 3% today. I can't even tell if these charts bottom. I would not touch Sentinel-1 with a 10-foot pole. Like, I would not touch that thing. FinTech came back a little bit today. You had Hood up today, and probably because of Bitcoin was up a lot, right? So let's be realistic with that one. And the rest of these are negligible moves. I don't think these are really big moves. Toast reported earnings today. PayPal is up. Like, I don't trust this pump in PayPal. Maybe it might go up. I don't trust it. But yeah, I would say flat in FinTech. FinTech has been getting murdered lately. When it comes to travel and leisure, you have Wynn up about 5% today. And you have the cruise lines down a little bit today. CCL is down 3%. RCL is down 4%. Booking.com, which is an amazing company, is actually back on the $4,000. That's actually interesting. Yeah. Oh, Zeta. I forgot to mention Zeta. My bad. Zeta was actually up today. I think it was about 4%. Yeah, actually it was up like 4 or 6%, but not anymore. They're reporting earnings on Tuesday. I believe it's Tuesday. Hold on. Zeta earnings. They report. No, they already reported that one. Zeta. Let me look on the earnings hub. Oh my goodness, they don't even have an earnings hub. I'm pretty sure they report on Tuesday, right? They report on Tuesday, February 24. Oh, wow. It's actually not for a while. I thought they were reporting this coming Tuesday. I guess I was wrong. I guess that's the reason why those premiums weren't that high for next week. Anyways, we're just looking at those. I don't really do anything with it. I was just curious. So they report earnings in 11 days. So a little bit ways to go. This is a nasty chart. I haven't actually added to Zeta in a while. A while is in 2 weeks. But I don't like to add to charts that are like this. In fact, I would prefer to hedge these positions than anything. And I do have a decent sized position in Zeta. And I will likely hedge it if we do continue to get some downside. And it'll likely be like a 2-week hedge or something just to take advantage of that. I have hedged and bought puts in Zeta before, even though I have a large position. And it's not because I'm bearish Zeta. I'm just bearish to price action. And Zeta is a very volatile, high beta stock. So it will get hit, right? So I want to hold on to this stock, but at the same time, I will hedge against it if I have to. Right now, no hedging for Zeta. Kratos is up 2.5% today. Micron closed flat today. I thought that was actually going to be very green today. SanDisk actually was green today, but now it's not green anymore. So really, it's not like the worst day today. You did have a lot of dispersion as far as performance goes. Someone mentioned V sold off today. Or, you know, this is actually crazy. Uber was red today, and it was red basically the whole day. I don't know what's happening here, but I am pretty sure Grab is suffering the brunt end of the force with this as well. If Uber's down, Grab is likely going to be down. If you look at this chart here for Grab, and then you look at Grab's not even a small cap. Why do I have it there? You look at Uber, they've both basically been trending down around the same time. So you need to see some recovery in these before you start to buy it. At least I am. I'm not adding a Grab right now. The premiums aren't even worth it to short this stock. And it's not as crazy as a position as it was when it was like at $6.50. So I don't know. I mean, I trimmed it when I was up there, but I wish I trimmed more. I didn't trim enough, that's for sure. But still, you know, decent sized positions today. Yeah, 3-day weekend sell off. I mean, you know, we'll see if this continues into Tuesday. Reminder, futures open on Sunday at 6 p.m. Eastern. So we might have some futures volatility when it opens. Usually the day the futures are open, which is going to be open on Monday, but the stock market's not open. Usually we tend to see a reversal of the move that we see the day that the stock market is closed on the next day, right? So if the futures are down 1% on Monday, which I really hope they're not because that would really suck, the market usually is green after that. Like, it's a weird thing. It's not guaranteed, but it usually does happen. Yeah, I mean, they weren't terrible numbers, but they did miss on revenue, which is never a good thing in the stock market. Like, lower can go lower, guys. Don't get me wrong. The valuation with Grab is insane. I don't know why it is a $4 stock. I don't know why, but it doesn't matter what I believe because the market is going to do whatever it does. Lower can go lower. Never think lower can go lower. Lower can go lower. So my advice to myself, because I can't give you all advice, is don't continue to buy the dip into perpetuity. Like, why? Unless you're like a long-term 10, 20-year holder. Okay, fine, whatever. But like, if you're trading, don't buy the dip like on falling knives. You're guessing when the bottom is, and you could have guessed the bottom was here and you were wrong. Could have guessed it was here and you were wrong. Could have guessed it was, you go, oh, it's the bottom. Let me buy now. And you got rejected 50-day moving average. Over here, you're wrong. Over here, you're wrong. Like, it's just not a good idea. For trades, I buy bullish charts. I don't buy Webull. I buy bullish charts. And semiconductors has been the place to be, right? I mean, if I were to guess, SMCI looks like it's basing out, but I don't necessarily want to buy SMCI. I don't really trust this, right? I don't trust the price moving to SMCI. Maybe it's legit or whatever, but it's like, I don't know. That left a salty taste in my mouth. I'm cool with that. Qualcomm might have bottomed. Hopefully it bottomed, but we'll see with that one. But yeah, I would buy, well, this is very extended. I wouldn't buy on Semiconductor now. But ACLS is a stock that I went long at around $89 when it back tested the 20-day moving average. And look where we are. We bounced, and I'm going to go over the applied materials in a second. Hold on. Just wanted to check something real quick. Okay. Yeah, so we'll see what happens with that one. All right. So guys, it's up to you. You want me to continue going over some stocks? Like, I mean, I know a lot of these companies. There's a lot in the markets. I don't know, just after like looking over these companies for a while, kind of understand their businesses, kind of understand what they do. Airlines were just mixed today. Travel and leisure were just mixed today. Airlines were up. It looks like cruise lines were down. Housing market, these stocks actually bounced back today, or real estate. SLG bounced up 5% today, so that's good to see, but this is a nasty downtrend. I don't know why housing is pulling back so much. Maybe it's because the housing market's cooling off, but like, shouldn't that be the time to buy housing when no one wants to buy housing? I don't know. But I would not buy this chart. This is a crazy chart. Unless you're in for the dividend, you want to hold on to it. Pinterest is down 16% today. And this is crazy. Like, this is an insane chart. You ask me, I think Pinterest is going to zero. Like, or they're going to be taken private. Someone's going to acquire them. Because like a lot of people use it, but the stock and the market cap just keeps dwindling. Oh, that's still a $10 billion market cap? Wait, so at some point, Pinterest was $50 billion? And then at some point, it was $100 billion? Who the hell? Who's paying that much for this company? Like, I don't know. I don't get it. I don't get it. Yeah. Enphase kind of bounced back a little bit today. Axon Technologies, Axon Enterprise, like, guys, this is a phenomenal company. No one's getting rid of security cameras, especially body cams. Like, they are contracted to so many police forces and the police department, everything around the entire world, not just in the US, but everywhere. And also with I think they have federal licenses as well. Guys, Axon's not going anywhere. Now, when I buy the dip, it's still an expensive stock. Axon is still an expensive company. But man, some of this stuff is starting to look very attractive. At the same time, I don't buy charts that are downtrending, right? If we get some recovery over here, we creep up above the 21 to 9 EMA, creep above the 50 EMA, and start back testing the 50-day moving average. I might set up a good trade, or that might set up a good long. We'll see we'll see what happens with that one. Symbiotic, actually, that's interesting. It was green today, but that's arguably a bad chart. Viva Systems, healthcare software company. I can't believe it's trading down here. That's insane. Novo Nordisk. All right, what was the most green thing we see here? Roku is up 8% today. They reported earnings yesterday. Ooh, Dutch Bros reversed. Congratulations, Dutch Bros shareholders. But then it gave it all back. That sucks. How much was that up? Wow, that was up almost 17% today, and it faded the entire thing. Damn, RIP Matt Money. Let me actually, I want to send Matt this link, see if he wants to hop on. Hold on a second here. Matt Farley, Rocket Man, Rocket Lab. All right, so I would like to get Matt's opinion on some of these VG and Next. I haven't really been keeping up with it. Yeah, I got out of those positions. It just was not my sector, but I know a lot of you guys are in Next and VG, so it'd be nice to get a little bit of an update from him, see where he thinks it's going. I mean, he's just going to say, stop being a baby and just buy Next or buy VG. Like, that's what he's going to say, but we'll see. I mean, Bitcoin bounced a little bit today, but you know, this is a terrible chart. Financials. This is the thing that was hit today. Someone mentioned it earlier that Visa was down today. Guys, this is not a good sign for credit, right? So we already have 12 months of 10% caps on APR rates. This is not good for credit right now. And that's the reason why you have MasterCard down, AXP down, Citi. They're also a bank too, so maybe not nearly as impacted. But financials have been falling off a cliff. So this is going to slip into financials when you're talking about credit. Actually, this is not looking good for JPM. Oh, wow. Actually, I wonder how much those puts were. Crazy. Yeah. All right. That's funny. Someone said Amit wasn't streaming. I had to make sure he wasn't live. Listen, you know, when Amit goes live, the view count here just drops like a rock. That's when you know he's live. But I mean, hey, if he's live, that'll be awesome. I'd like to hear his input and how the market's going right now. SoFi, do I think it's going lower? I mean, I can't look at the chart and tell you it's not going lower because it looks like it's going lower. It's below all the daily moving averages. It's below the 50-week. It's below all the EMAs on the weekly. The monthly chart probably looks a lot better, but it is coming here to test the 21 of the monthly, the 21 EMA in the monthly. And that is just not a good looking chart right now. This is not a good looking chart. I mean, it could reverse, guys. We can go to green skies on Tuesday and forget about everything that happened over here. But like, look, There's a lot of bad looking charts out there. Now, the question is, am I still long? Yeah, I'm still long. Like I am long the stock market because I think that if there is a pullback, it's going to be quick and it's going to be bought up very quickly, much like what we saw last April. I don't know how big it's going to be, but I think it's going to get bought up very quickly because that is how the markets work today. It gets bought up very quickly, news is very quickly. A lot of hedge funds act a lot faster. People can just pick up their phone, buy and sell stocks and everything. But also there's still a lot of liquidity in the system and people are waiting to buy these stocks. The problem is that when are they going to buy these stocks? Huh? When are they going to portfolio sizes? Because it's not important, right? That's why we don't share. What if I had a $100 portfolio? You know, does that change anything? That's why we give percentage sizes because that's more important because Joe Schmo, who's following their favorite fintech influencer, could have a $10 million portfolio, right? So that's why we talk in percentages. And then someone might have a $2,000 portfolio, but like at the end of the day, it's still a portfolio. You're whether or not, actually maybe $2,000 is different. So, but whether or not you have like a 50 grand portfolio or a $2 million portfolio, I would manage those differently. But when you think about risk in the markets, right? If you had like a 10 grand portfolio, like you shouldn't buy like 50 stocks, right? Especially of a long-term time horizon. If you're like 20 years old, or if I were 20 years old and I had like a 5 or 10 grand portfolio, like guys, I wouldn't buy like 50 stocks because that's just, I don't know. That's too much to keep up with. You want to hone in on the companies that you think are going to be really good in the next 30, 40 years for very long term. And you just want to buy and hold those and just keep adding. Your goal when you're in your 20s is to make as much money as you can and invest as much money as you can. Don't make the mistake I did where I just spent money on having fun, right? But you want to work a lot, invest a lot, because when you get to your 30s, you want to have that nest egg you can kind of work off of. And look, if you're 20 years old and you start now, dude, you could retire by the time you're 40 years old just by investing, right? And I'll tell you something, if the market is flat in 20 years, we probably have bigger problems to worry about than worrying about whether you're financially independent or not. Like, of course, you want to be financially independent if the stock market is flat in 20 years. But chances are in 20 years, if you're invested in a company like Amazon, Meta, Google, and all these mega caps, they're going to be higher in 20 years. And if they're not, we got bigger problems. So that's just the way that I see it. Amr has a $100 million portfolio. Oh, that's it? All right. So Hood, Grab, Nebius. So I already went over these. So you can go ahead and look back in the video and see what's happening there. So let's move on to the next segment. We did have earnings for Applied Materials. You know what? I'll tell you what. Why don't we? I don't want to bore you guys to death. So what I'm going to do is I'm going to go over Applied Materials over here, and I'm going to talk about the good stuff on their earnings, and then we're going to take a look at some charts, and we're going to see what it actually affects, what this actually impacts, right? So we have the Applied Materials earnings, and they beat at the top and bottom line, and they also actually no. Let me share my my Twitter real quick because I posted about it yesterday. Let's see here. Oh, where's the networks? Oh, here we go. All right. No, that was after it. Okay, here we go. No, that was a different one. And dude, I posted a lot yesterday. Holy cow. Sam, why are you posting so much? All right, so Applied Materials, they reported Q1 fiscal year 2026. I don't know why these guys are reporting 1 quarter ahead. Like I don't know why these companies do that. Like, how off is your fiscal cycle? The fact that you're 1 quarter, I get the 1 year off, which still doesn't make sense to me. Like Nvidia is 1 year ahead of it. Like, why are you 1 year ahead? But then now you're 1 quarter off. Like, what happened here? Come on, Mr. CFO, what happened? Anyways, they beat the top line $7 billion versus they beat it by about 110 million, which is 120 million. That's a lot. That's a pretty big beat. Hey, they're down 2% year over year in terms of sales. Why is the stock up about 10%? Well, I'll tell you the reason why in a second. EPS beat, so they're becoming more profitable. This is a big beat when it comes to income, right? You're basically beating by 15%. So whatever the street expected you to have, you're beating those earnings by 15%. And stocks generally move in terms of cash flow expansion, free cash flow expansion, as well as earnings growth. And when you're beating it by 25 cents, 35 cents, you are growing a lot faster in terms of profitability than the market expects. So they re-rate you higher, right? So gross margin, 49%, operating income, Okay, so this is the reason why it was up a lot. Semiconductor systems revenue is $5.14 billion, and they provided guidance for next quarter at 7.65. So they're going to reaccelerate quarter over quarter, right? These are very big numbers to have, but they are a $250 billion company. Okay, so let me share their slides. So they said that their semiconductor equipment business expected to grow greater than 20% in calendar year 2026. This is their largest business, right? So they didn't go up because their revenue grew, their revenue shrunk 2%. They went up because they're going to accelerate their largest business by 20%. All right. If I scroll down here to they break it down by business segments over here. All right, here we go. So their semiconductor systems revenue, it grew. Oh, it doesn't actually give the year over year here. Am I missing it? It just says percentage wise. Oh, this is how much percent it is. Revenue, no, it doesn't have percent. Guys, where's my growth over here? All right, I'm just gonna open up a calculator. All right, so we had the semiconductor systems revenue at 4879. So 4879 divided by Q4. Where's Q4? Okay, you know what? Where's my full year? Anyways, I'm pretty sure that grew around like 10%, because I can't find it here, and I don't want to waste you guys' time by looking it up. But if this is going to accelerate to 20% growth year over year, that's going to push their revenue acceleration to maybe like 10, 15%. And going from minus 2% year over year to 10 to 15% is a very big deal when it comes to a growth company. This isn't even a growth company. They pay out a dividend, right? But they're part of the theme of semiconductors, and specifically they're catering to a lot of the memory companies. And memory is a very hot topic today, right? That's the reason why Micron is up so much. It's the reason SK Hynix is up because they're trading in Korea. That's the reason why Samsung is up. They're trading in Korea, I believe it. I think those two are trading in Korea. Maybe SK Hynix is in Japan. But these memory companies need to pump out a lot of supply because there's not enough supply to meet the demand. And if they have to ramp up their supply, they need more parts. They need more equipment, right? And they're going to tap Applied Materials for that equipment because they're producing a lot. And Applied Materials does more than just selling equipment. They provide parts and services and maintenance, right? So they're going to keep coming back as the more they use the machines, right? It's kind of like a car, right? So you have a gas car, not an EV, but you have a gas car. You're going to need to get the oil changes. You're going to need to get the belt change. You're going to need to get the volt battery change. You're going to need to do all this stuff with cars. And I don't want to get into it because I'm not even a car buff, but I know there's a lot of work to do in a car as you have it for a long time. And the same thing happens when you have multi-million-dollar pieces of equipment, like tens of millions of dollars worth of equipment needs to be serviced, needs to be maintained, needs to sell parts and all that stuff. And this is the reason why the stock is doing so good, because they are providing those parts to the memory companies that are ramping up. And this is where ACLS comes in. There is a specific sector, a specific segment within foundry, logic, and other. All right. So actually, it's more the semiconductor systems. I think it's a different part. But what ACLS does is they focus more on the iron implantation when it comes to creating memory chips. And they said that that is growing very rapidly. But they are not. Applied Materials is not the leader when it comes to that specific segment. They only have like 30% market share. The ones with the most market share is ACLS Technologies, and they're reporting on Tuesday, I believe. And I think those are going to be really good earnings. I'm very long ACLS, and I have call options on it too. So if it goes up, that'll be really good for ACLS. Oh, hey, what's up? Can you open it? Yeah, one sec. Sorry, guys. That's my daughter. Hold on. Here you go. All right, so that's my belief with that. Now, mind you, this isn't even a large position, but that's my bull case with that one. And Silicon Motion, I'll go over other stuff as well, maybe another time. But yeah, that is my bullish thesis with it. But you don't even need to look at. You don't even need to. I'm diving deep into the semiconductor industry because the picks and shovels is what's going up the most. Like these are these are companies where their charts are just out of this world, right? So if I bring up data center over here, like even though Broadcom's pulled back, like it's still been up so much. Vertiv, right? This is for air and cooling for servers, right? This thing is hitting all-time highs. Micron obviously has been ripping lately. TSM is trading near all-time highs. You know, it doesn't take a genius to realize that, look, these companies is what's moving in tech right now, right? So semiconductors is where the money's going right now. Now, is that going to continue? I mean, who knows? It could or could not continue. We will see. But the trend says yes for semiconductors. All right, so we'll see what happens with that one. The next thing that I want to go over is CapEx for hyperscalers. We already know that the hyperscalers are spending about $600 to $650 billion for 2026. We already got that. The largest hyperscaler in the world is AWS. And the CEO of AWS, not of Amazon, Andy Jassy, the CEO of AWS is Matt Garman, who recently started as CEO about a year ago, viewed by CNBC recently, and he talks about the CapEx for AWS and how they're going to spend it. And this is going to be very important to know why certain parts of semiconductors are going up. So let me go ahead and play this right now for you.
Again, 8th day in a row. Investors showing some concern after the company announced plans to spend $200 billion on the AI build during that last earnings report on Thursday. For more on those CapEx plans, we are joined by CNBC's John Fort, as well as the CEO of Amazon Web Services, and a CNBC exclusive. John, over to you.
Sarah, thanks. Matt Garman, good to see you. First after earnings. I guess I saw you in San Francisco a few days ago, but first time on TV. $200 billion is a lot. Granted, it's not all going to AI, but the lion's share of it is. When we last talked 6 months ago, I think Amazon was getting criticized for not spending enough here. So tell me how your plan for this spending you think is going to give you better long-term value.
Well, and thanks, John, for having me on. It's nice to see you again. Yeah, so for us, I'm just as bullish about the AWS business as I've ever been, frankly. And this last quarter, we reported 24% year-over-year growth on a $142 billion run rate, and very bullish about how we see customer demand. And as I talk to customers out there, every single customer is seeing more and more demand for moving their workloads to the cloud, putting their data on AWS, and then layering AI on top of that to get value for their business. And so we see demand increasing across a broad set of our business. And remember, for AWS, this demand is not isolated in one or two customers. We have tens of thousands, hundreds of thousands of customers that are driving this demand, and all of them are growing pretty rapidly as they're thinking about how they deliver more value to their business. And so we're incredibly bullish on AWS's growth over the next few years. And the $200 billion in CapEx spending, that's to invest in that future for those customers to be able to land their workloads in the cloud, for them to be able to ramp up. We need to build data centers. We buy servers. And so this is an investment for us. It's obviously a large number, but it's something that we think is a really great investment, and it bodes. It's an indication of how bullish we are about the future and the growth of AWS.
Matt, investors are trying to figure out how to measure this horse race between the various hyperscalers, of which you are one, Microsoft, Google, and sometimes others counted in that. And there's a percentage growth. There's also the dollar growth. You guys are big, so you move more with each percent than the others do. But what are some of the metrics beneath the surface that you're looking at when you gauge how well you're stacking up competitively with the others? When you're talking to your team, is it those percentages? What is it? The type of business you're winning? What is it?
Yeah, it's a couple of those things, I would say. One of them is we definitely look at that diversification of business. We're very focused on how do we get all of the largest enterprises in the world, how do we get all of the startups in the world building on top of AWS. And so there's others that have some growth that's very concentrated in some of these very large customers, and we have many of them, the OpenAIs and the Anthropics of the world building on us as well. But we're also, I think, for the long-term health of the business, very focused on how do we get every single startup out there building on top of AWS? How do we get every bank? How do we get every healthcare company? How do we get every retail company? How do we get every manufacturing company building on top of AWS in the cloud? And so for that, and there we see AWS winning the vast majority of those times. And as you mentioned, AWS is much bigger than some of the other competitors in the field. And so the percentage growth rate is lower, but in absolute growth rate, if you look at the absolute dollars added last quarter and the quarter before that and the quarter before that, AWS was bigger than everybody else. And so we continue to grow in absolute dollars faster than our competitors do. And that's part of it because we are winning many of these workloads, and we continue to see more and more customers accelerating their migration into the cloud.
All right, so he did discuss where they're going to be spending their CapEx or what their strategy is as far as spending their CapEx. But the more important thing about why the CapEx went up so much has a lot to do with UBS's guy, right? So UBS is a sell side firm. They provide a lot of research in companies. And one thing that they had said in a recent report is that 1/3 of hyperscalers CapEx increased this year. So they increased the CapEx. 1/3 of that is attributable to memory costs. Okay. So following this earnings season, UBS raised its 2026 and 2027 CapEx forecast for major hyperscalers by 43% for 2026 and 28% for 2027, respectively, to $827 billion and $915 billion, representing a 61% plus 61% and then a plus 11% year-over-year growth. So we're going to jump 61% from 2025 to 2026, and then we're going to jump 11% to 2027 from 2026. UBS estimates that memory for hyperscalers will rise from $53 billion in 2025 to $155 billion in 2026, and then $252 billion in 2027, generating approximately $100 billion in additional CapEx per year for just memory. Okay, 32% of this year's CapEx increase. UBS also noted that memory could add roughly $10,000 in cost per general server, with its share of the bill of materials for compute, rising from 4 to 6 to 6 to 7%. Meanwhile, UBS pointed out that memory cost share within an NVL 72, so that's an NVLink, all right? So this is like the entire server that Nvidia has as far as the GPU clusters, could rise from 6 to 16% as the platform transitions from Grace Blackwell 200 to Vera Rubin 200, calling this a meaningful shift. Let me translate this for you guys. Let me stop sharing my screen here. CapEx going to $650 billion increased from last year, right? I think the forecast for 2026 was like $400 billion. So additional like $200 to $150 billion in CapEx. 30% of the increase has to do with memory price increases. Micron, okay, high bandwidth memory. Micron, SK Hynix, and Samsung, they sell high bandwidth memory to these fabrication plants as well as the fabless companies like Nvidia, AMD, and all of these ASIC companies, because they need these fabless designers need the memory, like high bandwidth memory, to create their GPUs. Okay, it is very high in demand. You've heard it on all the conference calls. Memory is a constraint. Elon Musk said it. Jensen Huang said it. Andy Jassy said it. Matt Garman said it. Everyone has said it. So now these memory companies have pricing power to increase the cost of their products. And then what does it take to build your products? Why increase the prices? It's because they're passing off those costs to the customer. The people who are providing supplies to build the memory and the machinery equipment have that pricing power to the memory companies. Applied Materials, Silicon Motion, ASML, right? And all Lam Research, all these companies, in addition to ACLS Technologies, they have the pricing power. And I think we're in the middle of a re-rating cycle for all of these memory companies, right? We've seen the re-rating for memory stocks. We have not really seen the memory, or maybe we're in the middle of it, of the memory cycle for machinery, supplies, and materials for memory, as far, even also including the other machinery companies as well. This is why ASML is at all-time highs. This is why Applied Materials is near all-time highs. This is why these companies are going up, because of this. $650 billion of CapEx, that's a $200 billion increase from expected, and then increasing another $100 billion in 2027. Where's that money going to? It's going toward these companies. Obviously, it's also going toward Nvidia, AMD, and all these GPU and server companies, whatever. But the big differential are the suppliers for memory. That's why these stocks are ripping. So that's why I'm bullish ACLS technology, ACLS, and that's why I'm bullish Silicon Motion. That's my argument from it. You don't have to listen to it. You don't have to do anything. I'm just telling you what I'm doing. Do as you will. Do as you will. All right. So I believe, okay, yeah. So I want to get into Nebius and Datacenter. Since we're already talking about memory and CapEx, we need to talk about Nebius. Nebius reported earnings on Thursday. Those earnings were actually pretty good. They missed on the revenue, but I don't even think that's important. I'll give my thoughts about it. So let me go ahead and open up the Nebius earnings. Actually, did I have? I already saved it. Okay. Let me share this slide. All right, so this is the slide deck from the Nebius earnings. And we had over here that they came in at $1.25 billion for 2025, full year 2025. I forget the exact amount they came in for just a quarter. Okay, here, group revenue, $228 million, up 547% year over year. Triple digits, okay? But law of large numbers, this isn't going to happen forever. It's going to start slowing down at some point, or it probably is already starting to slow down anyway, but it's because of the law of large numbers, right? The surprises that came in was not the $7 to $9 billion guidance for 2026. We already knew about that. The surprise was the additional 500 megawatts of contracted power capacity for 2026. It was originally 2.5 gigawatts as of last earnings. Thursday's earnings, or yesterday's earnings, yesterday morning, they said it's going to be 3 gigawatts. So they're contracting more power out there. All right. That is not a small number at all. They also reached adjusted EBITDA profitability for the first time, right? So that was something good to see as far as group revenue goes. They have $3.7 billion of cash. Guys, they're going to raise more money. And that's what they said in the earnings call. I'll get more into that one. ClickHouse, $15 billion round confirmed, a $15 billion valuation confirmed. They own about 28% of ClickHouse. That's like about $4 billion of asset they have on their balance sheet just from ClickHouse alone. The company, I think, is let me look up their market cap. They're a $25 billion company. So that's $20 billion of enterprise value, about minus the $3.7 billion cash. Enterprise value is probably closer to like $16 billion. And they're guiding for ARR, annualized revenue for Nebius, not the actual revenue, recognized revenue, $7 to $9 billion. So that means that they're trading at likely a price to sales for 2027 at 2 times. This is the reason why the stock is going up. Okay. This is the reason why the stock pumps up. Now, sentiment is very volatile with the stock. So just because it's dropping doesn't mean the thesis is out the door. Wall Street just sells when it sells and they buy when it buys. So, there really is no other thing. They didn't announce anything new here as far as any new partnerships or contracts. And I wasn't necessarily expecting it this year, but they are expanding their footprint. 7 locations in the US and also 3 locations in EMEA, all right? Europe, Middle East, and Asia. Total of 16 sites. All right. So we already talked about this contractual capacity, and they're well on track to reach 800 megawatts to 1 gigawatts of connected power, not contracted capacity, by the end of 2026. All right. So that was pretty consistent with what I expected. They already mentioned the Microsoft thing again, and we have more stuff here. Something that they said here, which is really interesting in their earnings, was 1010 accounts for 6% of the revenue. Where does it say that? Yeah, okay. So 1010, which is their educational business, accounts for 6% of group revenue. Group revenue came in at $227 million. and 6% of that was about like $14 million, right? So Triple 10 is growing revenue at 88% year over year. This is becoming a profitable business for them. They're expanding very quickly to Latin America and also in the US. It's basically providing educational videos and courses for people who are looking to get into engineering or AI and software, whatever it is, right? The rest of the revenue, $214.2 million, is their core business, right? So AI cloud for Nebius, also any money that they pick up from these contracts they sign for contracting out compute and so on. That grew at 547% year over year, right? So they don't have AVRide revenue in here, which is their taxi cab service, automated taxi cab, and also food delivery, or those little robots that are running around. They don't have that on here because they said that that is immaterial, which means that it's so small that there's no point in putting the earnings. And they no longer report Toloka revenue on here. So Toloka revenue would probably be a lot more. But they said here that Toloka results have been reclassified to discontinued operations to the current and prior period. So they're not reporting Toloka revenue in here. So you're not going to see that massive contribution. In fact, earlier this year, early in 2025 is when they stopped reporting individual business segments. They just report group revenue, and then commentary will include the other businesses if they feel like they want to do that. So the very big news, and they didn't say it in here, they said it on the earnings call, which was very surprising, was that they're increasing CapEx for 2026 to $16 to $20 billion. All right. That's a lot of money. When I heard that comment on the conference call, I was like, oops, stocks are going down. It went down for a little bit, but since then it's recovered. Great, right? Don't short these stocks, right? Unless you see a confirmed downtrend. It was just a blip and it recovered more than since. You would have gotten your face ripped off if you shorted it. Let's talk about CapEx, guys. These guys will keep raising money. Even after this build out, they're going to keep raising money. What makes the difference between Nebius and IREN, and you guys already know I sold IREN. All right, I already said it on Twitter publicly earlier this week so I could open the position in ACLS Technologies and Silicon Motion, which are actually doing very well. I own Nebius. I haven't sold Nebius. I would like to add to it, but the cost basis is around like $30. So not really favorable for me to add to it right now or size up. I did do like tiny ads up there, but like very small ads. So the difference between Nebius and IREN is that IREN is a full stack company, right? They own all the land, all the rights and everything. They own all the facilities. They're building everything on their own, right? So that's the biggest difference between Nebius and IREN. But another very big difference that Nebius has is that they are diversified in multiple businesses here. They have Triple 10, they have AVRide, they have Toloka, and they also have 28% of ClickHouse. And then they have the core business as well. Similar to IREN, Nebius has an AI cloud product and servicing, which is already online. IREN does have it, but they're barely earning any revenue from it, but it will ramp up, right? So if we think about exposure to this whole industry, I've always said that if I'm going to pick companies that are not, oh, looks like Steve is here. I'll bring him on in a second. If I'm going to pick companies that are not part of the AI cloud, it would probably be CoreWeave and it would probably be Cypher. But I want to stay within that, and I already have exposure to it, so I might as well just bring it down to Nebius. All right, so I'm going to bring Steve on real quick. Oops. What's going on, Mr.
What's going on?
Great to have you here, sir. Where are we headed? What are we doing this weekend?
You were just driving on the wrong side of the road for a moment.
Oh, okay, that's fun.
You know, freaking New York City driving, people pulling out in front of you, no bueno.
I've done that before, in the city especially.
I think everybody has.
Yeah. No, it's
So how's it going?
So someone asked if it's Asian Steve or it's Milkman Steve. Who's Asian Steve?
Jason from Paper Treads.
Oh, okay. You call him Asian Steve? That's funny. That's funny. Like two completely different. Like you're a much more concentrated in fundamentals and very long term. Jason does have a long term portfolio, but he mostly is with trading. So like very different. So if you want to say trader Steve or long term fundamental Steve, that would be you. Milkman, I guess Milkman. Where did Milkman come from?
So I happen to drink a lot of milk, And whenever I would come on a mid-show, I would be drinking milk. And he just called me at one day.
Okay. That's cool. Interesting how that name derived. But I appreciate you bringing the milk for the event. If you guys were not at the event last couple weekends ago, that was an awesome event. There were a lot of people there. AMAT's going to do another one, I believe, in March in LA, which is going to be great. I'm going to be going to that. Are you coming to LA, sir?
I already have my hotel booked.
Oh, okay. So I'm going to see you again. That's going to be awesome.
Yep.
Hopefully we'll spend more time chatting with each other because it was crazy there. And I was there very shortly, but I don't have to worry about a flight home, so I will stick around longer.
Yeah,
So
this time we're doing the flight. So, yeah, I'm coming in Friday and I'm leaving Sunday.
Okay, cool. Where are you staying? Or what area are you staying
I'm staying at wherever he's having the thing. He had a link and I booked a room.
Oh, shoot. I don't even know where it is or any of the details yet, so we'll see. Is it in Santa Monica or is it in Hollywood? Culver City, I think.
Clover City.
Culver City. Okay. Culver City. Dude, eat all the pizza you can in New York because like the pizza and Italian food out here is just terrible.
No, I'm going for when I come out there, red meat the whole time.
Yeah, there's some good steakhouses out here actually.
Yeah, you can't miss with red meat when you go to a big steak.
Yeah, that's true. I don't know if you're a fan of Brazilian steakhouses, but this place called Fogo de Chao in LA, which is really good. But they have a lot of good steakhouses out here. And even like if you go to like what's it called? Crenshaw Boulevard or Beverly Hills, there's a lot of good steakhouses down there, like right next to the street over there. But yeah, man, there's a lot of good steakhouses. We should all go out. We should all go out and get some steak. Yeah, June, that's awesome. You're going to be here too. Good to see. Someone asked if you're bringing milk to LA. Like how?
No, I am not bringing milk to LA.
Yeah, Steve did bring milk for a lot of people. And I couldn't take it because I was going on a flight right after and it would have went bad. Otherwise, I would have given my son. I don't drink dairy. I drink almond milk. So you're probably not going to like that. But yeah, man, if there was something that I wish I got when I was in New York, it would have been some bagels. I didn't get any bagels when I was in New York, but I had a beef patty and I had pizza.
Okay.
Yeah, so it was good. All right, man. So we are coming close into NVIDIA earnings. NVIDIA earnings are coming up in February 25, Wednesday. And NVIDIA is actually down like 2% today. In fact, a lot of semiconductors were down today. Not all of them, but a lot of them were down today. And what are we thinking for this earnings? Like I went over, I don't know if you're listening, but I went over Applied Materials and basically the CapEx and how a lot of the increase in CapEx for all the hyperscalers. In fact, UBS says that 30% of the rise in CapEx is mostly attributed toward the memory price increases. So what are we thinking for NVIDIA?
They're going to blow the doors off and people aren't ready for what Jensen's going to say. I have slides that I prepared. Obviously, I cannot show them because I'm driving, but I pretty much memorized the numbers. And they've gone from, in 2023, increasing CapEx from the big four, Amazon, Alphabet, Microsoft, Meta by 55% year over year. And then in 2024, it was like 63 or 64%. And we just increased CapEx going into this year by 70.63% year over year. $620 billion. I mean,
that's the number. Yeah.
When you think about, and that's only from 4 companies, there is no way NVIDIA is not coming out with great guidance. The infrastructure build out, and here's the funny thing. People think that this is like the last year of expanded CapEx. It may not continue accelerating, but it's certainly not going from a 70% year over year to negative. Like maybe it falls to 40% or 50%, but got news for everybody. 50% of 620 is 310 billion. You know, you start talking about 40%, that's like 270. So NVIDIA is going to be a main factor in the CapEx build out. Taiwan Semi increasing CapEx by 30% to meet the demand from their clients, i.e. NVIDIA. I think NVIDIA can do no wrong at this point.
Yeah, no, they're definitely not going to be growing data center as quickly, but there are a few other segments in Nvidia, and one of them is gaming revenue that is actually starting to grow pretty materially and starting to get pretty big, where it's actually going to make a difference in terms of its group top line. So if I pull up the Nvidia quarter over here on Fiscal AI, all right.
Man, all you guys use Fiscal AI, all of you.
It's great, dude. I don't have time to do these spreadsheets like you. So it's easy for me to pull it up. I mean, arguably for me, with the way that I do a lot, is like fundamentals are important, but like price action crucial, and also the themes. Nvidia is definitely part of the theme. So gaming actually increased about 30%, decelerating 48% last quarter, and it's now at $4 billion. Data centers are 51%. So if we give it like actually, let me do last 12 months over here. So for the last 12 months, data center is $167 billion. The last 12 months of gaming revenue is $15 billion. And they're growing at a run rate of 27.3% as of last quarter. So given a couple years, gaming could be growing faster than data center. And even though data center is going to be massively larger, if we do get a ramp up in personal devices, smartphones, and so on, it's not just gaming, but also just the fact that if you start rolling out and scaling up more smartphones, more mobile devices, and more EVs and whatever it is, these other segments in NVIDIA are going to start providing more to the top line, but also contribute more profitability, but also keep people in their ecosystem, right? Also, the NVIDIA does have CUDA, which is more of the software that manages all of the GPU clusters in all these environments. And they also have NVLink as well. So even though for data center, the GPUs might slow down a little bit, and that's probably more to do with the pricing power versus the actual inventory they're pushing out, I do think that the other segments, as well as NVLink, will help keep the acceleration afloat for this company. And I think that people think it's going to end this year. And like, I agree with you. It's not going to be as fast. In fact, in 2024, they were increasing revenue at a 200%, and then 270% peaked in, no, 325% growth was data center growth in April 24. Last quarter was 70%. So the fact that they were able to keep near triple digit growth for data center alone for almost 3 years is insane. And even if they slow down data center to 50 to 40%, like we're talking about 50 to 40% of a near $200 billion business, which is a lot, right? So on top of that, gross margins, I think a lot of people worry that gross margins peaked and would drop down to the 60% range. They actually kept them around 72%, right? So gross profit margin is 70.1% last quarter. And I think they were saying that this is pretty much the bottom of gross margin. These are crazy gross margins for a $5 trillion company.
Well, think about
also
this.
A hardware company.
Go look at what the consensus estimate for revenue this fiscal year is going to be. So I don't know if they have it on Fiscal AI, but they have it on Seeking Alpha out to like 2034. And I believe it is such a crazy number that when you put the current margins on it, you're talking about anywhere from 180 to 220 billion in net income. What the hell are they going to do with all that money? It's called buybacks. It's called investments in other companies.
Oh yeah, the investment, the ventures that they're doing is probably become a bit more important. I mean, they already own 90% of the portfolio in CoreWeave, and
so yeah, scroll down, go to you're on Seeking Alpha, aren't you? Yeah, click on earnings, go to the second tab, and then scroll down. It's like 400 billion or something like that.
Yeah, I mean that's not enough. That's just not enough.
No, but think about it. They have last quarter they had a 56% net income margin. So if you say 50%, 200 billion net income. Like I don't think we're bullish enough on Nvidia, and I think people are underestimating Vera. I think they're underestimating what Nvidia can do in the actual CPU area, because everybody is just focused on GPUs. They could take a major bite out of that.
Well, yeah, that's where PC comes in, right? Personal computing. So we haven't really. I'm pretty bullish on Qualcomm, and I still need to look into them more. Yeah, they still need to they still need some improvement, but like last quarter wasn't terrible. But yeah, Qualcomm, a lot of their business is tied with a lot of smart home device, a lot of mobile devices, as well as a lot of personal computers and laptops. Actually, mostly laptops. And we are starting to see. I think we're starting to see an acceleration of that because it's mostly been focused on data center, but the cycle for personal computers is probably going to start ramping up again, especially when you're starting to see more focus on device AI, right? So it's already the talk of the town. This is the reason why Cloudflare and DigitalOcean are trading near all-time highs because of the fact, well, not near all-time highs, 52-week highs, because of the fact that it's all been about content delivery network. But now these LLMs are becoming more efficient where you don't have to reach out to the internet and hit some server out there to run your LLM. You could actually host some of this on your personal computer or host part of it in your personal computer so that way you get a faster response. And as this becomes more important, this is when NVIDIA's other GPU lines besides the enterprise lines will start to pick up as well. And it's actually kind of a bull case for AMD because AMD is focused on that and also Qualcomm as well. I mean, I don't think this cycle is really going to end anytime soon. And it's tough to say, like, with the price action in the market, because some of it's speaking the other way around. But semiconductors or the SOX ETF is actually trading near an all-time high. So we might be seeing software go down a hill, but semiconductors still pretty bullish, man. And did you check out the Applied Materials earnings yesterday, by any chance?
No, I do not follow Applied Materials or ARM. I don't have enough time in the day. I follow about 50 to 75 companies religiously. I can't add anymore.
No, that's fine. I mean, you're still going to, since you have the position in NVIDIA, you're still getting a lot of that. Are you an AMD?
No, AMD is one of my biggest regrets. I sold a lot of shares at $3.72.
Wow.
Like a lot of shares.
You missed out.
I used to sideways trade AMD back in like 2012. Right when they came out with the APU chip, I was so bullish on them. They were always trading between 5 and 7. I would sideways trade it. And then I got caught because it just fell off a cliff and it stayed there for like 2.5 years.
Yeah.
And I was like, I just want my money back. And the second that I was at break even, I unloaded everything at like $3.67.
Oh, man. Was that because Lisa Su started at AMD when?
She just started like 6 months after I sold.
Yeah. It wasn't until like 2018 when they just like seriously started to ramp up. I still remember in like 2019 or 2018, AMD was trading at like $30.
Yep.
And that was the last time they ever saw that price again. Because after that, Lisa Su really ramped up. And then you had, of course, the Bitcoin craze where GPUs became very important. And then that came back, and then AMD went down to like $50 in 2022. And it was literally just $80 like last April. But yeah.
It's a great company. And if you go to, there's a site that I use to track CPU market share, and it's called Passmark. And they have all these different things on there. And when you look at the CPU market, AMD overtook Intel in 2025 for I think 2 or 3 quarters on market share on desktop CPUs. Now, they did not overtake them on laptop or servers, but they started making a dent on servers with the Threadrippers. And they're just a great company.
It says here that Intel still has the lead on there, but yeah, they caught up dramatically back in
Intel.
Yeah, that was when they bottomed. Yeah.
Yeah,
that was when they bottomed. Let me actually look at the price chart of AMD real quick. 2018 was when they ramped up.
Yeah, you can go through. They have 4 different charts on there. They have desktop, laptop, server, and total. So that's the one on desktop. I'm out of light, so I can look at your screen. So that's the one where they flipped them at one point.
Oh, okay. Let me see here.
But they haven't been able to flip them on servers or laptops, which is interesting.
For CPUs, I mean, that kind of makes a lot of sense. Like, you're going to go with the Xeon processors with server CPUs, not so much AMD's line. I mean, they just own that market. But like
They
CPUs
do.
generally is where, I mean, if you think about GPU compute, which is more specific with the logic that these LLMs are running, it's obviously more important. CPUs is running the logic for the central. That's why they call it CPUs, central processing unit, because it's doing it for the whole computer. But when you think about using LLMs, that mostly is going to be GPU focused. But this is important because the system's got to keep up with the GPU. So this is important. Let me check a video card.
You know what I bought more of today?
What?
I'll give you one guess.
You bought more of? Oh, Amazon? Yeah.
No,
Actually,
I bought more Zeta.
Oh, Zeta. Yeah, they report earnings. Let's see, a week from Tuesday.
Yep.
If you're going to be home, you could join us. We're going to be streaming that one for sure.
I am so far down the rabbit hole on Zeta that I just keep buying more.
You know, the valuation doesn't make sense. I did my last.
People are shook about SaaS right now, and it's getting
Yeah.
lumped into it, and the market is overreacting and throwing a tantrum.
Oh, you got cut off for a minute there. I brought up the Zeta quarterly on Seeking Alpha. I'm not Seeking Alpha, Fiscal. So if I look at the estimates on an annual basis for 2026, they have $1.73 billion. For 2025, they have,
growth is expected to reaccelerate this year at like 34% year over year.
Yeah. Oh, that's what they expect now? Okay. So that's why it got re-rated. But what's weird is that it's trading below where it was before. So it doesn't, that's a part that doesn't really.
Look, the big thing with Zeta is the balance sheet's great. On the income statement, they just flipped operating income. And it looks like they're going to flip net income in 26. And it looks like EBITDA is going to continue to expand. Free cash flow positive. And they have more cash than debt on the balance sheet. So what is there not to be bullish about?
Yeah.
Everything is trending in the right direction. You have accelerating growth. And if I see that if they start reporting a strong net dollar retention, this could be a baby Palantir. Not saying that this is a 10 bagger, but at a 4 billion market cap, is anybody really going to try to argue that this can't become a 15 to 20 billion dollar company in 2 years? Because if it does, that's a 4 or 5x.
They, I mean, there's also the financials, which is important to remember in the stock. But hold on, let me send Evan a link. He wanted to hop on.
You also have everything they're doing. They just came off the whole Zeta conference. I watched 2 of the interviews out of it. It just seems very bullish. And the fact that they are able to generate a positive ROI for customers utilizing their platform, I think you're going to see more people using it.
Yeah, no, it's not only the expansion they have as far as clients goes, but I think what's more important is that a lot of their expansion is with medium to enterprise size businesses, and those are going to be the bigger contracts. The ARR is going up too annually. Probably what's more important about this company, and you like from a fundamental standpoint, is that they have Athena, and Athena is comprised of three different parts, right? You have your front end, which is most of the chatbot that people are using to interact with Athena on the UI. You have your middle portion, which is basically running off of the data that you have, or it's running the processes on data that it's getting from the first part, where it's data that is in its entire ecosystem. And obviously, as a client, like you don't have access to other people's data, but through Athena, you do have access, but not that you can see their information, but you can see the trends, right? So you could actually ask Athena in real time if like what are some campaigns that I can start, right? Because Zeta is a marketing product. The issue that I can only say is happening with the market. Not only is it software, but also it's a marketing product. If you have like a recession, whatever slowdown there is, companies cut the budget on marketing immediately. Now that doesn't mean that Zeta's revenue is going to go down, but that's what the market's thinking, that it's going to be impacted by it. So the market's just looking at like the near term, right? The market's not looking years ahead of time. The market never looks years ahead of time, which is the reason why we get the opportunity. But I think what's more important is the fact that they have this data, and the data is all first party. Like they don't pay other companies, or maybe they do for some of their data, but most of their data is first party. So all the data they have is collected through their platform, all the clients that use their platform, right? And they have like almost a decade of data. And the benefit is that other companies out there that are in the same industry, they have to pay for their data in order to be able to create these targeted campaigns, like the best campaigns that are suited for certain clients, right? So what Zeta can do is they have, right now there's usage of SEO, which is search engine optimization, which is what Google uses and all these platforms use to become like a highlighted keyword. So if you Google something, it shows you the result. Because we have so much use of chatbots, there's now generative engine optimization, which is like, if using ChatGPT, you see like these hyperlinks instilled in the messages or responses you're getting. And that's GEO, or generative engine optimization, which is becoming critical because more people are using chatbots. So you want to start having the best data there. And Zeta is one of the leaders in providing that data. In fact, they did partner with OpenAI recently. But hold on. I see Evan's on here, so I'm going to bring Evan on. What's going on, Evan?
Hello,
How are
my
you?
friends. I am doing well. I am doing well. You know,
This is
nothing.
stock
What
market
else am I
news.
going to do on my Friday night besides hang out with the guys? Thank you for letting me join in.
No problem. No problem. Thanks for coming. How are you, sir? Are you a shareholder of Zeta?
No, I am not a shareholder of Zeta.
All right.
So my reasoning is maybe a little different than other people. I feel like my whole life is around advertising and that stuff, the business and things that I'm going into, and I just don't need to concentrate myself more. But
Yeah.
I get it. It's interesting. It's advertising is a great time right now, especially when the economy is doing well.
Yeah, no, it's going to become pretty important. I mean, the market's certainly pricing these advertising companies like they're going to go out of business. I mean, Steve, have you checked out the earnings from Reddit?
No, I don't really care about Reddit. I don't understand why Reddit is a big thing. I mean, here, and maybe I'm just too old, but why am I searching on Reddit for anything?
A lot of people. Oh, go ahead.
I apologize, Sam. It's your stream.
No, go for it, man.
I was gonna say, just like people like getting information on X, Twitter, Reddit, there's just a style of people, the communities, the rooms. It's just a place where people enjoy sharing information and stuff like that.
Yeah,
There's just a
I
community
don't
that's
understand the
coalesced.
business model. I mean, if I need to figure something out, there's so many chatbots right now, from Claude to Gemini to ChatGPT to Grok, that I'm asking one of those first before trying to find a room and ask random people and see what they're talking about.
So ChatGPT actually does reference Reddit threads or Reddit posts. That's one of the results that comes up on there, or it basically crawls across the entire web for a lot of the results. Like, when you're using ChatGPT, they don't have like a dictionary, or they do have like kind of a dictionary they look up, but they also crawl through Reddit and Google search results and everything. But also the amount of growth that Reddit has as far as their expansion goes on a global scale is pretty insane. But not only that, but this company is pretty damn profitable. It's not necessarily like an App 11, because App 11 provides the sell side platform where people can actually sell the real estate on their products for other people to advertise on them. So it's a bit different, but like all this advertising or ad tech companies, like they're all getting hit, right? So your TTDs, which is still expensive after its massive drawdown, your Reddits, App 11, Unity, all these ad tech companies are like falling off a cliff because of this fear that, why do we need to worry about advertising when we could start worrying about other ways that, or whatever the theory is. Like, these are obviously all getting hit, right? And I think a lot of it has to do with like contraction of the economy fears or recession fears. And the first thing that, Evan, the first thing that gets taken off the budget or budget cut during hard times is marketing, right?
It gets cut hard, it gets cut fast, it gets cut first. I will say, I don't know if I've necessarily seen that out that much there right now. I think a lot of fears around AI and what all these platforms look like. And, I think fundamentally, like, what are the moats? What's going to be able to drive this going forward? I think it's not being able to connect people with ads. I don't think it's the platform. I think it's having the thing that people can advertise through, the distribution, the models there. So that's why, like, we've had this talk about Disney in the past year. Like, I get a little bit more excited about the people with the content, the eyeballs, the Reddits of the world, than I do the other ones, like kind of being the middleman between it.
Yeah, I mean, these are very volatile companies in terms of stock price, but we're really getting to the point with a lot of these software and ad tech companies where like they're just getting sold off materially because like they're just throwing it out, right? Like a lot of the money is rotating. Like if you look at the stock market today, and I don't know if you checked out the other sectors, Steve, as far as like the broad SP index, the SP 500 sectors, but like you actually know, you probably noticed because you have a lot of dividend stocks, right?
Yep.
Those are not hit hard at all. In fact, Verizon is trading near a 52-week high. And I think you own Verizon, right?
Verizon is doing several things that are making the numbers better. You have Chevron and Exxon that were beat up for no reason. I mean, Chevron's up 22% since I started a position. You got Vertiv up, which isn't an old school company, but it's definitely an adjacent sector. Home builders are up. You got QXO's up. I mean, there's a lot of companies that are doing well. I think we're at a bottom right now for software. I think this is so overdone that it's insane. And I think the market's starting to find a bottom on this. I really do.
I mean, hopefully, man, you did get a little bit of a bounce off IGV today, but the chart is just falling off a cliff.
Right,
like
but the chart's falling off a cliff, but the profitability and the revenue isn't. That's the biggest thing.
Really
and the street doesn't even believe that the revenue is disappearing. I mean, if you go back to Seeking Alpha, type in ServiceNow or type in CRM, go to the revenue, look how many analysts are projecting for next year, for this year and next year and the year after. The street does not believe that software revenue is in decline. It's just that the whole thing's overdone. Are there companies that will get displaced by AI? Absolutely. Will there be consolidation? Probably. Will there be new companies that come out and take a piece away from the smaller or middle market companies? Yes. But enterprise software, people don't understand how difficult it is to move away from those platforms. And also the decision-making process about the C-suite making a decision to utilize some homegrown or some little unknown product over a ServiceNow or a Salesforce. It's just not going to happen.
Yeah, I do. Well, my thing with CRM or Salesforce is that they're already a giant, very mature in terms of software. And I mean, a lot of their growth is inorganic. I don't necessarily like that. But there probably is like a mean reversion play with Salesforce.
Yeah, but think about it. And I'm not looking at it as a growth company. I'm looking at it as it's trading like a tobacco company. And that's not going to stay forever. Look at the forward numbers on Salesforce. They're trading at like 15 or 16 times this year's earnings. They're trading around 11 or 12 times 2028 earnings. That's basically tobacco company territory. For a company that has more cash than debt, for a company that's expected to do $13 billion in free cash flow this year, and expand their revenue from $41 billion this year to $60 billion in 2030. I mean, I don't see it go much lower. It certainly could. It could go down to 150. I just think it's improbable at this point.
You know, speaking of companies that are doing really good and are trading very richly, I'm bringing on someone. I don't know if you know Emp or Ryan. He's a massive shareholder of Walmart. What's going on, Ryan or Emp?
Let's go. That's a great way to get welcomed into a stream right there. Just some love for Walmart. Trading twice the valuation of half the Mag 7 right now.
Does that make sense?
No.
Steve, what are your thoughts on Walmart trading so rich?
Sense. And look, I love Walmart as a company. It's one of the best American companies, employs a ton of people, nothing but respect for the company. But if we're going to give Walmart and Costco these valuations because they're durable goods, they're sticky revenue, and the idea that people have to buy groceries and will continue going to them, you have to give Amazon the same valuation because you can make an argument the revenue is just as sticky on the consumer goods side. And the one thing that Amazon has, or the two things that Amazon has that Walmart and Costco don't, are AWS and an advertising platform. And they have better overall margins. So I just think that there are companies that are expensive, companies that aren't expensive. And if we're going to allow Walmart to stay at these valuations, then the Mag 7 companies should be trading at higher valuations.
I think it's a flight to safety.
Walmart.
Walmart.
But how is it a flight to safety? Walmart's profit margin is what, 4.5%? How is that flight to safety?
No, I mean, the money's got to go somewhere. Because look, if it's coming out of software stocks, if it's coming out of the Mag 7, it's got to go somewhere. And not all of it is going to energy. Not all of it's going to home builders or real estate. Not all of it. And it's not even, it's being taken out of financials too. Financials are just falling off a cliff as well. They're really going to very quote unquote safe companies. And what's really funny was that Costco used to be that safe company that everyone flocks to. Like, remember when COVID happened? Costco was heading toward all-time highs. It was pushing all-time highs, and now Walmart is like the new Costco, basically. It is a flight to safety. I was actually surprised to see Apple down today, considering how much of a flight to safety there actually is. But yeah, I think it's just another one of those stocks that are flight to safety, and probably when we get that re-ramp up in a lot of tech and software, that's when you're going to start seeing money come out of these flight to safety.
Yeah, but I'll push back on that. What's the definition of a flight to safety? Durable revenue. You're going to tell me Microsoft isn't a flight to safety? I mean,
I'm only talking about what the market's doing.
Windows. You're never replacing Windows. You're not replacing Office 365. You're not replacing LinkedIn. You're not replacing Azure. And the whole idea that AI is going to cannibalize stuff, well, you have to have data centers for AI to run. Like, Microsoft's not getting disrupted and making $175 billion a year in EBITDA. They do more than $3 billion of EBITDA a week. If that's not a flight to safety, I don't want to hear that Walmart's a flight to safety. Enterprises can't run without Microsoft.
Correct. I agree with everything there. Apple did just have the news the other day where they're pushing back their Siri to late 2026, their Siri remodel, as my Siri goes off on my Apple device here. But that's probably why in the short term Apple started selling. I mean, the market's just throwing tech out the window right now, right and left.
It's crazy.
Like that's the thing. And then the flight to safety, like you could say, like people may stop going to certain places, may stop luxury spending, travel like that if in a slowdown in the economy, which we don't have yet. But just for the sake of the argument, people don't ever stop going to Walmart, though. If anything,
Agreed.
Walmart does well in those times because instead of taking that extra trip to a Best Buy or to somewhere else, you just, while you're at Walmart, you pick up that TV or that coffee maker or whatever it is. So I think Walmart actually outperforms in those environments. That's the flight to safety argument there, but I agree with what you're saying, Stephen. It's not really a safety with the revenue side of things.
Yeah, you can make an argument that everybody loves a deal, but when a recession or difficult times happen, everybody needs a deal. And I completely understand that argument. And I think Walmart will just continue to grow, and it's a great company. I just get annoyed when we start. I'm not saying anybody here. I'm just saying the general market theme is flight to safety with that and Costco, yet the profit margins are thin, and they're not giving Amazon the same flight to safety because they're worried about the CapEx spend. Like, give me a break. Give me a break. Nobody is stopping using Amazon. Nobody is getting rid of Prime. And they have to spend that much money. And if they didn't spend, and if you think about Bezos or any of those guys, if they just decided 5-10 years ago just to plow all that capital back into buybacks and dividends, we would never be at the technological part we are now. And they're playing the long game for the next 5 or 10 years. And that's why I think this is a moment in time we're going to look back on and be like, we should have bought the hell out of some of these companies because the market just got this wrong. Nobody can compete with Alphabet, Microsoft, Meta, or Amazon. They just can't. They don't have the balance sheets. They don't have the operating cash flow. And it's Sam, if you want to bring up a chart of their operating cash flow or EBITDA expansion, that is what happens when you spend tens and hundreds of billions of dollars on CapEx back reinvesting into yourself. Apple barely spent on CapEx and has barely increased operating cash flow. These other ones killing it on it.
I mean, you're right. You know, that creates opportunity for the long term. But when you're talking about like price action,
I'm talking years. I'm
correlations of
talking 3 to 5 years. I'm not talking
then
about being a trader.
Then this is an opportunity. It clearly is an opportunity.
Yeah.
But when I'm saying flight to safety, that is literally like what the market is doing right now. And the way the market is working is that there's going to be a massive digestive period with CapEx, and Amazon is going to be free cash flow negative. Meta's going to be free cash flow negative. All these companies are free cash flow negative and not printing money anymore. And all that money is going to go toward CapEx. And then that's going to start impacting the sentiment of shareholders, which is the reason why they're selling the stock. Like that is the ultimate fear when it comes to SMID caps. Obviously, they can hit the off button and stop investing so much of CapEx, but there is nothing in these earning calls that says they're slowing down. In fact, they are not slowing down; they're speeding up. And
no, they're in a prisoner's dilemma. But the thing people forget is Microsoft does not report on a calendar year; they report on a fiscal year, July to June. So in the summer, when Microsoft reports, they're giving guidance for their fiscal year 2027. You better believe they're coming over the top.
I actually saw that before because Applied Materials reported Q1 fiscal year 2026. Like, does that really make a difference? Like, or is that just what the fiscal year?
For this argument, it does, because Microsoft's already giving guidance on CapEx for their 2026 fiscal year. Meta, Amazon, and Alphabet just gave guidance on 2026 because they report on a calendar year. So they're going to be halfway through the cycle of spending. Microsoft is going to have to announce so much more CapEx in the summer for the following year because their Q1 is everyone else's Q3. And then that's going to create a vicious cycle where if they end up saying, you know what, we got to do the same thing as Amazon, do 200, watch Zuckerberg, Jassy, and Sundar come out in next December and up it again. Like, this isn't stopping for a couple of years.
So I don't know if you saw the UBS report as far as CapEx goes. They gave a forecast on what they expect CapEx to be for 2026 and 2027. So I'm sharing it on my screen right now. And if anyone wants to see it, I'll put it in the chat as well. I'll even put it in the private chat in case you wanted to go to it. Hold on. So over here it says, following this year's earnings, UBS raised its CapEx 2026 to 2027 forecast for hyperscalers by adding 43. They raised it by 43% and 28% for 2027, respectively to $827 billion for 2026 and $915 billion for 2027, representing a 61% year-over-year growth in CapEx. So that's actually an acceleration that we had from 2024 to 2025.
Are they adding Oracle as a hyperscaler?
I don't know.
Because it's 620 this year just from the big four. So I'm willing to bet that they're adding Oracle in there.
They're probably adding other ones too to come up with that number. I mean, the majority, 620 is the majority of it. So, you know, that's.
Yeah, it's a massive
number. So what they're saying is that they're going to grow in 2027, but like this is the last year of massive growth in CapEx before 2027. So we can kind of expect it. It's still going to grow, but it's going to slow down pretty dramatically. This does not take into account.
Look, the two big questions
because their model.
The two big questions are if all this money is spent, which we pretty much know it's going to be spent, and you're bullish on technology, who the hell can compete with them in 3 years from now? Nobody. All roads lead back to these companies. And Meta may be the best one out of all of them, only because they don't have to come up with the content. Every user makes all the content for them.
Sorry, I clicked on something. Can you repeat that?
Meta may be the most interesting. It's trading at the most depressed valuation, and they don't make any of the content. Every user, they have more than a third of the global population making content every day for their platforms, and it just gets more sticky.
Yeah, I mean, I guess the fear with Meta, and I'm surprised they gave back all of their gains from the earnings. Very surprised they gave it
Same
all
here.
back. Like I thought that was it. That was the bottom, but now it's looking like it's going to go lower again. You probably agree with me on that one, Em, because it's back below all the moving averages and stuff. But well, I think the question is, why is Mark Zuckerberg spending so much CapEx if they're not renting out this compute as opposed to the hyperscalers that are increasing their CapEx, right? So you have Amazon, Google, Microsoft, or Azure, Google Cloud, and AWS, and you also have Oracle Cloud Infrastructure, or OCI, that are renting out this compute to either private or public clients, right? Meta isn't doing that. So the problem that comes here is that once all this stuff is built out, look, the hyperscalers can always use this compute and re-rent it out to other people, whatever. For Meta, what happens when AI becomes more efficient and you don't need all this massive expansion? That's the problem when it comes to Meta. I don't think that's a problem because which is the reason why I still own Meta. But yeah, I mean, even if they turn on the off switch, which it looks like they're going to turn off in 2027, they're all going to come back to free cash flow positive again. But not only that, but they're going to be much more profitable because of the expansion utilization of all their products, and the build out is already complete. So their CapEx isn't going to be zero, but they're going to spend a lot less. And they've already reduced the headcount, and their processes are going to become more efficient in these companies. I mean, yeah, this is an opportunity, but obviously in the short term, the market's like, nope, we're going to sell these companies. They're all going to get disrupted.
I think it's interesting with Meta because there's a couple things. There's some short-term memory people that remember Zuck overspending on a failed project before, and now he's overspending again. I don't think the two are anywhere correlated. I think it's unfair. The other thing that I'm curious about, though, Stephen and Sam, is we heard a lot about Llama a year ago. You never hear anything about Llama and Meta's AI. You never hear it. It's never in the news. You don't hear updates or new versions or anything about it. I don't know if it's a publicity problem or if they're just not making advancements.
I mean, they've always had their open source available. It'll always continue to be available, but they're integrating it with their entire ecosystem. But I think they're integrating it more on the back end than the front end, right? So it might not be as much in use as like a Grok or Gemini or whatever with Llama, but on their back end, they are using all these AI capabilities to bring as much relatable content to people who are using their products, and also bringing the relevant ads. That's why they use so much of the AI in order to do all that in the background. Like, they're clearly doing it. The thing is that they're not, I don't know why they're getting into wearables still. Like, they should just stop, right? And they would save so much money. Even if they cut 30% of Reality Labs, like they just need to cut it completely. Like, it's not working, right? I don't think we're there yet. Like, we're not there for it. And that is literally what's holding down the entire business. The fact that he's still pouring so much money into this. And I don't think he's going to stop. He's going to be right one time, but by the time he's right, everything he's spending money on right now is probably not going to be that important.
It's like venture
So
capital.
Sam, I'll push back on that. As a Meta shareholder since the IPO, I am 100% fine with Zuckerberg spending the CapEx on that because he's earned that right. He has built one of the best companies in the world. The guy doesn't miss. And he can be wrong for a long time and pour money into it. But if he's right on this, and his track record is he's usually right, and if wearables is the next big thing in computing, I'd rather him own that space than Apple or Alphabet. Because
We just lost you. We just lost them. I just don't think he's going to own that space. It's going to be Apple. Apple owns the wearable space. If Apple doesn't own the wearables, like the problem is it's iOS.
You're
Apple
just moving so slow. I love
think-
Apple.
I think
Make it
Meta
happen,
can
Apple. Come
compete.
on.
I think Meta really can compete in the wearables with these glasses. I honestly think these glasses can be a big thing.
I mean,
But
they might
we'll have
be,
to
but
see.
like, it's like,
But to say that Zuckerberg has been right many times, but the metaverse was a complete failure.
yeah.
I mean,
I mean, the
also, I
metaverse is
disagree,
probably going to
though.
real sometime.
The metaverse is virtual reality, is what's going to happen rebranded. They just had the wrong branding on it. They had the wrong level of immersion. They thought people wanted to transport to a different world, but they wanted to enhance on top of the world on top of it. I think
Yeah.
I really see it's potato. It's the same thing. It's the wrong marketing.
Now they're the AI, like you said, that is like I use WhatsApp a lot. I know Sam, you use it, and like I WhatsApp, whatever AI stuff going on all the time in there. I don't really notice it elsewhere, but that's where I see it the most. So I guess like maybe it is being used a lot in the back end. So like maybe back to that first point, maybe it's just a publicity problem that they're not talk, because like when I listened to Zuckerberg on the call the other day, I didn't really hear him talk about it hardly at all. I think he mentioned it once maybe within that entire call, and it's like, okay, if you're doing this, it's like everyone wants to hear about AI right now, and if you're doing it, you should be talking about it.
Yeah, I mean, probably, but
It's just a branding thing.
Yeah, maybe, but I still, I mean, I don't think it's a waste of money. I just think there's better use of that capital. They obviously have a lot of capital to play with because they produce so much. I think they're like 40% to 50% free cash flow margins. So they have a lot of money to play with. But I just don't think that it hasn't done anything. I don't think now's the time for wearables. Wearables is going to be relevant in the future. And I guess it makes sense if he stops now, then he's going to start much further behind if he does restart it. But I don't think that's a market they should be in. I think they should continue accelerating and pouring all their efforts into what they do the best versus trying to explore wearables, which I still don't think they're going to compete with Apple. But they could probably have market share, but like not be a meaningful competition to Apple. It's just like Android, right? So
If wearables are a decade out, I feel like Apple's a screaming buy.
That's fair, but I don't think they're that far out. I think they're a lot sooner. And if you're Meta and you live off of people creating content and posting stuff online, the glasses taking video is the next level of capturing every moment that people have, whether it's their kids, whether it's taking pictures out in public, traveling, whatever it is. Content creation with those new glasses is the next level.
Yeah, I want to see.
But it feeds back into themselves.
With wearables, I want to see more of augmented reality, but not that you have like an entire screen a couple of centimeters away from your eye. More like it's planted above what you're actually seeing. So like the glasses are actually see through, but you just see the image over it. Because when I use those the Vision Pro, like, dude, my eyes were just blasted after I took those things off my head. Like I said, I used it for 30 minutes and my eyes were just like,
no, I don't want
destroyed.
I think it's the glasses, not the Vision Pro, not the what's the Oculus or any of the. I don't think that is the future. Like yeah, no, it's cool. It's cool. Like I get it for certain scenarios and stuff, but like I think just from an everyday basis, like being able to talk and not pulling your phone out of your pocket and all that stuff, which I think people are going to do no matter what. I think that is going to take some years to like not defeat, but like push that away.
Yeah. I mean, if you think about like the laptops and the smartphones, you know, people still have to have computers. Like, I don't think that's going to go away even with smartphones. Like people are still going to have computers or desktops. Yeah. People are still going to have smartphones because that's just like a much easier way to, or like, okay, if you're using like AOL, well, not AOL Instant Messengers, people can use them, or WhatsApp or whatever. Like a lot of people can type way faster on the computer and be more versatile with their communication on there. But if you're using a phone, it's like it's easy to access your mobile, whatever. And the glasses are going to be the same thing. Now, I agree with you. That's when the glasses will really make sense, when you're planting the visual on what you're seeing versus like just looking at a computer screen. Like that's the only thing that bugs me about it. I never knew that that's what it was for a while. And I know Meta, they have the Ray-Bans or whatever they are, but
well, the new ones with the heads-up display are just now launching, like this quarter.
Like it just projects the image onto what you're seeing, not like an actual
screen. It's within, it's like a little tiny screen within your vision profile on one of your eyes.
That's what I'm thinking. That would make a lot more sense. And obviously as technology gets better, they will improve on that, where like it's literally like a whole visual you could see on there. Like Minority Report, basically. Right? Like that was freaking awesome what they were doing there. And I could see that happening. Especially I just saw Minority Report recently. You ever seen that movie?
No.
What?
I have not.
Oh my goodness. But in Minority Report, as they're walking around, this took place in the year 2040, 2042. Like it's clearly not going to happen at that time period. But basically your eyes were used as a scan for identity, right? So you could do that right now with your PC or your phone or everything, but it does more of your whole face and recognition with it. But later on, as technology advances, there's going to be like these little cameras and identifiers everywhere that looks to your eyes, because your eye is probably the most unique thing about your entire body, even more than your finger.
Yeah, like retina scanner stuff.
So there's an entire database that stores all your information on there, what you like, your hobbies, where you work, whatever. And these advertising companies are able to access that data or whatever is publicly available, which is the reason why privacy is becoming more important. And this is what Meta does, right? If you're using Facebook or Instagram or even Twitter, it bases it off your recent feed to serve you the most relevant ads you're supposed to get. So if you're walking in the mall decades from now, and your eye gets scanned, you're going to see a TV screen or on your wearables, whatever you have, an advertisement that is specifically catered for you in the mall to get you to walk into that store that's a few stores down, right? So like when Tom Cruise or John Anderton, who is the character in the movie, was walking in the mall, he was seeing and listening to ads that was calling out his name and saying like, "Oh, John Anderton, you should try out these glasses. You know, these glasses are the feet." It's like, it was so weird because the way they had it in the movie was that they had the screen of the person talking, looking right at you. But it's like, what about the person that's like standing next to you over there? Do they hear the same thing? Like, or do we all have earpieces on? Like how, or maybe they're sending like sound signals that go straight to you, which is probably something that's going to happen in the future too, where it's like, you can target sound at people so only they hear without having to wear headphones or anything, which would be crazy to think about. But like, if you really think about AI, like this is a capability of AI and it's going to get there eventually, right? And this is the reason why it's like, it's so hard to be bearish to market like 10, 20 years from now, because look, technology is going to get better. There's going to be a point where we're using Twitter as we're walking, or X as we're walking. We're watching YouTube as we're walking, like you were saying, through the glasses, where it's augmented reality, that the video is playing right there and you don't need a gigantic screen on your face in order to watch it. You just wear regular glasses.
Yeah, and we're at an interesting spot because the spin, and people have talked about this for a couple years on all this spending going on, right? Is like eventually the market's going to be like, okay, where's the return on all this spend happening? And if it's still getting pushed out, like, do I want to keep pouring money in investing right now?
Yeah.
And like, I see something like Amazon and it does look really attractive. I see Meta and it looks pretty attractive. It's still kind of, I don't know. It's not like, I don't think it's a bargain, but it's still like pretty attractive. But I think, the last 2 to 2.5 years, maybe even more, the market has literally just chased all this like technology AI company stuff, like especially the mega caps and then all the derivatives thereof. Especially more lately, it's been even, okay, which sectors are these, or where's all this money getting spent? Where are the constraints? And like, you see what memory's done lately. That's the current constraint on continuing all this build out and everything. But you also had the market basically forget about other really good companies for a long time. So like, while you can look and say, okay, it's a flight to safety right now, it's also of like, hey, we all chased this crowded trade for 2.5 years, and now we're spreading the money out elsewhere until those things kind of pick back up. I think the market's in a really interesting spot because you look at some of these companies and you could say, yeah, they're kind of defensive, but also you could say, well, they just didn't get any love for 3 years. When you look at NextEra Energy, you look at ExxonMobil, you look at Pepsi and Coca-Cola, you look at Walmart, which Walmart's kind of just been on a trend the whole way, but you look at some of these other companies and then you look at like the RSP, the equal weight, and it's still right at all-time highs. And so it's like the market there is rotation going on, there is broadening out of the market, but I still think you need these tech companies to lead you before you go anywhere as a whole. And right now, the market's just not loving these companies. And I don't know if we need a narrative thing to happen or if we just need some type of little reset. But until that leadership comes back in the market, I think we're just in a really interesting spot. But it makes sense when you go back and think for 2.5 years, everyone chased these names. They led the way up, they led the way down, they led the way back up. And right now they're trying to lead us back down, to be honest.
Yeah, no, I agree with you. I mean, I was just saying this earlier before you guys came in the stream, because I was looking at the markets, I was looking at different sectors and everything. Because obviously, everyone on Twitter, a lot of the YouTube stuff, like a lot of people are generally focusing on like high tech, high beta stuff, and that's usually like what's displayed on you, what's talked about on Wall Street and everything. Well, maybe not so much Wall Street, but like it's usually what's out there, right? The catchy stocks that a lot of people talk about. But yeah, the Chevrons, I can't even think of some names off the top of my head, but anything other than these stocks, they don't really get talked about that much. But the RSP, the equal weight SP 500, is near all-time highs. They didn't make an all-time high today, but it literally just made an all-time high.
It's like a percent. It's like a percent away. It just made it like yesterday or day before.
Even like Verizon's at 52-week highs. A lot of dividend-paying companies or real estates or REITs or whatever, they're trading all-time highs. Not New York real estate, unfortunately, but a lot of real estate companies are trading all-time highs. Home builders, we already talked about energy companies as well, trading at all-time highs. Like not everything is falling cliff, which is the reason why it makes it so hard to believe like we're going to get a 20% bear market, because these have to fall. Now, one thing that I did find very interesting is that financials, and we were talking about this with Casey when we were on the stream, financials are falling off a cliff too. And those tend to be forecasting of a pullback, right? So tech pulling back is one thing, which is going to weigh down the market. But when financials pull back, that's an indicator that there's actually something wrong. But also New York real estate falling off a cliff is pretty interesting too. Like, why is that falling too? So like, these are the kind of things that I look for that give me kind of a heads up that maybe this is a little bit bigger than we thought. Maybe it's developing into something. But the fact that the S&P 493 is trading very high, and arguably half of those 493 are not even expensive at all, they're cheap, is the reason why the market's still afloat. But I think we're starting to come to a point where like everything's being thrown out, right? Or at least some of it's being thrown out, where it's like even the flight to safety sometimes is being thrown out too. Like that is when you get your cataclysmic 20% bear market.
Well, yesterday,
everything gets thrown out.
Yesterday, that's what it looked like, right?
Yeah,
just for one day. Now, it wasn't continual, but for one day, you had everything across the board was selling yesterday. Now, today, you bounce back a little bit, and certain sectors bounce way back. You look at the small caps. You look at so like you said, financials look bad, and they're performing really bad. The beginning of the year, they were leading the whole market. Tech was still going sideways. Tech's been going sideways since the end of October. The financials were leading the market. Hey, there are going to be lesser regulations and all this. A lot of people had this thesis for them. They made their run. Now they're resetting. But if you go look at regional banks, KRE looks great. It just pulled off the highs and it bounced big today. And so KRE looks okay. And so it's like, well, we love regional banks, but we don't love big banks right now. And they're just kind of all over the place.
Yeah, it is pretty weird, and it's not consistent either. I mean, if you look at the last month, it's been a little bit consistent with like what's leading and what's not leading. But on like a day-to-day basis, like it is just not consistent. The only consistent thing is that software is dead. Like that's the only consistent thing that I'm seeing across the board, and big banks are dead. But besides that, it's all ebbs and flows. But like generally speaking, not all tech is going down. Like Semiconductor, SOX is trading near an all-time highs.
Yeah,
right?
yeah. Look at SMH. SMH looks good right now.
Yeah. Oh, look, Steve is home.
And to your other point there, like back in November, I was looking and I was saying, okay, all of your Mag 7 stocks are all across the board right now. The pain trade is going to be sideways in tech for the next few months, and we're still there. But we're seeing other pieces of the market do okay, energy and all this stuff. So it's like, okay, what's next? Where does the balance come from? Do people go back into tech, or do we get a correction? I feel like some people are cheering for a correction at this point. Maybe a 7% or so pullback on the S&P gets you to the 200-day, and they're pulling for the correction just to like get it over with so they can buy the next dip. And I see that argument. I guess I see that like that want or that desire for, okay, if it's going to pull back, just go ahead and do it, because the pain trade has been the sideways grindy trade, and it really has been painful for a lot of people that are trying to trade this market.
We're only 2.2% away from all-time highs.
No, that's why I brought up today. I'm like, we're right there. Look at RSP, and then look at QQQE, the equal weighted NASDAQ. Yeah. It's really not done anything but gone sideways the last few weeks. It's not down.
I didn't even think to look at the equal weight Qs or anything.
Look at equal weight Qs.
RSP is like basis points away from an all-time high.
Exactly.
What's going on, Steve? Welcome home.
Apologize.
No, that's fine, dude.
I got 2 phone calls and I hit end on both of them, and then I couldn't hear the sound anymore. And so now I was driving and I didn't have my reading glasses on. I couldn't mess around with it. And then I pulled into the underground garage, and obviously cell phones don't work through concrete and elevators and stuff. So I apologize.
Oh, you live in a, I didn't know you live in a building. I thought you have a house.
Yeah.
We're in Queens.
I'll tell you off stream.
Oh, yeah. Give me your address.
What's your IP address?
Yeah, give me
What's
your
your
address.
I don't want
Give me
to
your social
have
security
to
number.
use my Second Amendment rights if I don't have to.
Are you going to plead the Fifth?
You know.
Actually, no, it's a Fifth Amendment. That's why it's called plead the Fifth. What I was thinking there. Yeah, no, we were just getting into like market dynamics, which probably is not important for your style of investing. But I mean, I guess what we can go back to, because we were talking about what's leading the markets right now, regionals and energy, right? So why do you think regionals, or do you think regional banks are a good buy here, and why?
I don't follow regionals enough. I mean, I have Truist, but I just don't follow them enough to have an educated information on it. I follow the big financial centers.
Yeah, so
I personally like fintech, and I feel like it plays off similar. For the most of the time, plays off of similar plays that regional banks do.
Yeah, I think what we can say about regional is just a broad macroeconomic statement is that with the Fed cutting rates and the Fed expected to cut more, it's going to open up borrowing. You're going to have more small and mid-sized businesses borrowing from regional banks. They'll make more on their net interest income. I mean, it's a pretty simplistic way to look at it. I don't know enough about what they own on the underlying assets from the, like Flagstar owns a ton of New York City multifamily, et cetera, et cetera. But I think it's more a lending play at that point.
Yeah, I mean, I don't think fintech is the same thing as like regional banks, and also, well, especially not large banks. People associate fintech with like just tech in general, but more of like a call option on tech. So you have to have the economy doing really good, and you also have to have tech doing good. And that's probably the reason why a lot of these fintech companies are doing like really good middle to end of last year. But now, like they've just, I mean, SoFi is is it already under $20?
It was the other day.
Yeah, like something like that. I still remember when it was in $6, $7 range after like the whole market was at all-time highs. Like that just made no sense. But it was, like middle of September when they did their first 2 rate cuts. That was when like SoFi just took off. But I would say that, we're getting 2 rate cuts priced into this year already. We haven't had a rate cut yet. I don't think they're planning on cutting rates until like June or May or something like that. And that is banks, right? So like, why is Carry ripping, but like SoFi isn't ripping? Like, even though SoFi has a really good profitability profile, is it its book value? Like, is that the reason why? Like, why is SoFi lagging behind other banks as well?
I think it's getting lumped into being classified as a bank. I mean, look, their primary business, and I have a lot of SoFi, their primary business is lending and banking. That's banking. It's not being looked at as a growth company or technology company because of where the majority of their revenue and contribution profit comes from. And if you classify it as a bank, it's trading at a big valuation for a bank. So I don't know. I think it needs to really hit on the tech platform to change the narrative. That's just my opinion.
Where are they at on because they keep doing offerings, which the market doesn't always love, even though they can be a good thing. But where are they at in that part of the growth? Because it does seem like they keep tapping for more cash to continue to grow.
Yeah, I wouldn't be surprised if they keep tapping the markets. I mean, they had 106.4% rate on selling loans. I mean, that just expands their capacity to lend.
and they're getting a big ROI on that. So I'm happy with them doing that. I'm not sure how much more they'll do. I don't think it's for acquisitions. I just think it's for shoring up the amount that they're going to be able to lend out, especially with student loan banking coming back and potentially making a move in the housing once the Fed cuts. And I don't believe we're getting 2. I think we're getting 3 or 4 rate cuts this year. I said that last year. I still think it.
I don't think he would have picked someone that would have cut less than expected, even though he's coming in with a little bit of a more hawkish hand than people were expecting and the market was expecting. I think that's part of this downwards move here. I'm a betting man. I've net lost money betting, so you could take this next comment with whatever, with that caveat. My money would be on 3 or more.
Same. I mean, Goldman just came out and said they think 4 cuts are coming.
I don't think the amount of times they cut matters. Like
it does.
Whether it's why like 50 basis points.
Matters.
I don't think it matters as much as quantitative easing. Like Fed balance sheet expansion is what's really going to juice up a lot of companies out there, and especially
think about it like this: you lower the Fed effective rate, you lower the cost of capital. So now companies that have floating rate debt on their balance sheet pay less in interest expenses. People who have fixed rate debt are now able to issue new debt at lower prices and buy back the higher yielding debt and have less in interest expenses. That expands margins. It also creates an opportunity for businesses that have been holding off on borrowing to expand to be able to borrow at lower rates and get a bigger ROI on that capital. It's going to juice the money centers, and it's going to juice where that capital gets spent and generate increased revenue and increased profitability, most likely for the largest companies. Because as you expand, companies like Microsoft are selling more E365 licenses. Azure is going to get more, AWS is going to get more, you're going to get more advertising spend on Meta and Alphabet, you get more office supplies at Walmart. It's going to be very good. Like, we want rates at 2 to 2.5%. It would be the best thing for this market. It'll supercharge it.
I think what would really supercharge the market is expansion of their balance sheet, mostly because the long-term rates become an issue, right? So the Fed controls the short-term interest rates by cutting rates. The long-term rates is really what a lot of things, especially the 30-year mortgage, focuses on, and the Fed does not control that. However, if you are buying bonds in the open market or you're doing QE, then you are able to somewhat put a ceiling on some of those yields on the long-term bonds. And the thing is that Scott Bessent always criticized Janet Yellen about issuing bonds on the short end of the curve because rates were going up, and that did bite them in the butt and did expand the Treasury's balance sheet very quickly, which put us in even more debt. And not criticism of how she did it, but that's what he's criticizing. And he wants to start issuing bonds at the long end of the balance sheet. But in order to reduce the amount of debt accelerating for the US or the Treasury, they need to issue them while rates are down. So if we were to have QE continue, that will put a cap on the long end of the curve. It would instill some form of yield curve control, which would mean that there would be less debt growth for the government. And because GDP is increasing so much, you'd have a higher or a lower debt to GDP ratio, which ultimately is going to see like the balance of the entire economy or the strength of the economy. So, I mean, the market needs QE, right? Or tech needs QE. If you lower rates by 50 basis points or even 1 basis point, it's not really going to, I feel like that's not going to be as important if you're not doing QE, or if in fact you're doing QT or quantitative tightening, which is what Warsh said he wanted to do in the first place. But now we're saying the other thing about it, where he wants to start opening up a new facility that is buying bonds from the Treasury or from the government, right? Which technically is on the bond market, but like just the sentiment that that's happening would mean that maybe Warsh is not a hawk. And like you guys were saying, like, look, why would Trump put someone in the office that wants to end QE? I don't think he wants to do that. Or why would he nominate someone in the Fed that would not decrease rates? He wants to decrease rates. It's just a matter of how much, but more, I think, is important is whether he wants to shrink the balance sheet or not. Yeah. All right. So we are getting to about 3 o'clock my time, and I got to go get my son now or soon. But you guys want anything else you want to add before I turn the stream off?
Yeah, it is. There is one other interesting thing that is going on, and there's a couple of them that are going on tonight. But Tuesday is the deadline. 13Fs. That deadline is
that's right.
Tuesday, so it will be Warren Buffett's last portfolio update. We'll see. Rain's fully handed over. You're seeing what his last portfolio is. There's a lot of ones that are coming out today. George Soros, Seth Klarman, etc. I saw Seth Klarman bought some Amazon. I don't know. But yeah, that was the 13F deadline is something to watch out for. Obviously, also the market being closed on Monday.
Did you see the speculation today that Berkshire sold Apple and Bank of America?
I did.
That's weird.
Like Buffett's out of the way, and they're just like, get this off the books.
How much cash are they going to have? That's the question.
Well, the
Question is,
one-third of their
what
market
do
cap is
they do with
cash. Yeah. I don't know. They're mostly an insurance company, so don't they need to have that cash as collateral?
They have what, 300 and something billion in short-term T-bills?
Yeah, they had 300 plus before this quarter, so it'd be interesting. I mean, they bought Google. That was pretty timely last season.
All right, I'm throwing Steve's Twitter down there for you guys.
I will say, go follow Steve. Go like the stream wherever you're watching. Go subscribe to the channel. But shout out to you guys. I appreciate you, Sam. You've been doing a fantastic job. A lot of people watching this channel on the Sam stream. If you're not already subscribed, you should be subscribed. Obviously, shout out to Steve.
Yeah, Steve, are you going live tonight?
Podcast now.
Go live every night.
Yeah, you go live all the time, man. Every single time I go online, you're live. There was actually that time when Cashflow Chronicles was on the same time that you were on with Matt. I know that Matt was on Cashflow Chronicles with Chris.
Matt was on with me, and then he went right to Cashflow Chronicles.
I was like, dude, what are these stream hoes right here, man? They're always streaming all the time. I'm like, damn. I'm like trying to
well, we don't have kids. I don't have kids. You know what I'm doing tonight? This is what I'm doing. I'm getting off of it. I was at work all day. I did this from the car. I'm at the computer. I'm going to write an article for Seeking Alpha. And then at 9 o'clock, I'm going live with Matt and Tevis.
What's the article about?
I'm probably going to do my dividend harvesting series today and get that out of the way. And then over the weekend, I'm going to try to do 3 or 4 articles. So, and probably like 3 or 4 streams because I have no life set.
Damn.
Must be nice.
And if I was going to remember when I was on that wolf trading thing and I was like, whoa, KHC looks like a long over here because it was breaking above the 21 and 9 EMA and above the 20-day moving average on that Friday. And those contracts were not expensive. I mean, you need like a bigger move on it, but it's like, dude, if you traded that in size, would have been a guaranteed win right there. I love those.
All right, so before everybody goes, what's the one company you're the most bullish about in the short term right now that you think is just severely overdone to the downside, or you think that it can still move?
Walmart. I'm not gonna say Walmart.
Let me clarify. If I was gonna just staying bullish, it's Walmart for me. But two companies that I am very bullish. I think I like Nubank and I like Mercado Libre. Both of those two, I think Mercado Libre has been stuck in this price range for quite a while. I think it's due to make another move up after consolidating. So those two, and I'll give you another boring boomer stock, Boeing. I think Boeing looks great still.
You've been hanging out with Tanner. Did he pay you to say Mercado Libre and Nubank?
There was a Mercado Libre delivered a package to my house an hour ago. So I'm an actual user of Mercado Libre.
Oh, wow. He lives in Mexico.
So I know the company from a personal use perspective as well. Every small business I go to down here, it's like every other one has Mercado Pago, the payment terminal system. And so they just have so many vectors of their business.
Yeah, they are literally the Amazon of Latin America. Someone said in the chat earlier, I can't find it, but they're literally in they're the Amazon of Latin America minus AWS, but they do have their own infrastructure, but they do host their infrastructure in AWS though. But yeah, Mercado Pago is like their AWS basically. That's like their cash cow or becoming their cash cow now.
Yeah, they have a bank. They're this one of the their online banking or whatever, their digital banking is growing like crazy too. So like them and Nubank, I'm very bullish digital banking in Latin America. I have a whole thesis around that for another day.
I would love to hear that at some point.
We should.
I would love to hear. We actually own Walmart de Mexico for very similar reasons.
And they're huge too. And people don't, so like at the end of every neighborhood down here, including mine, there's these little bodegas Herrera is what they're called. They're basically little mini Dollar Generals, and Walmart owns all of them. Like when you go in there, you pay on a Walmart terminal. Walmart owns all of them. And a lot of people don't even realize how big Walmart is in Latin America, and especially in Mexico.
Yeah, that's
huge. There's 3 Walmarts within like 5 minutes of my house and a Sam's Club.
That's amazing.
That's good.
Kevin, what about you?
Honeywell?
Yeah.
Honeywell. Oh, Sam, did you go Sam first?
No, go for it. Go. Yeah, he asked you.
Part of the move might have been played out there. I am excited about Honeywell this year doing its spinoff. That is one name that I am watching. And I dipped my toes into Robinhood over the last couple of days. Maybe that means crypto moves and maybe BMNR goes up. I feel to have lost too much money to say that at this point in time, but I don't know. Maybe we're closer to the end of this crypto movement than not.
Honeywell is up 24% today.
Yeah.
That's crazy. He's in Mexico. I don't know if you want to say where you are in Mexico, but he's in Mexico.
I just put it in the chat.
Okay. Oh, okay. You literally told. Why don't you just give us your address, dude?
It's a big city. Good luck.
Good luck.
It's like if I told you I'm in Dallas or somewhere. It's a big city.
Yeah. You know, if Steve told me where he is in Queens, that might be a little bit easier to find him if he like told me specifically where, because Queens has like these little tiny towns there, and you would the square miles of each one is like not that big. Like if I told you that I was from, if I lived in like Bayside or something, then it's a lot bigger. But if I told you I was from like Long Island City, it's like if you knew someone was in Long Island City, you'd be able to find them, or like Woodside or something like that.
Yeah, I'm in one of the bigger areas where you're not going to find me, but I just don't want to have to use my Second Amendment right.
No, it's all good. It's all good, dude.
Pretty cool painting you got behind you. You and the cow?
Dude.
Oh, yeah.
He did that. I think Sam saw it in person. Freaking crazy.
I want to know what the neon light is. I can't make it out.
It says Milk Gang Studio established 2025. I just didn't turn it on right now.
Is that what you and Amit named the thing?
No. It's they got 2 great guests on so far. I'm curious on who the third one is.
You know, it's gonna be good. That's all I can say.
Yeah, no, he knows what it is, obviously.
Is this like a weekly show committed, or is this like yeah,
we're trying to make it a weekly show. I mean, there may be a week here and a week there that we miss just from scheduling issues, but eventually we're gonna turn it into a weekly show. So we're gonna be as close as we can for now, but I think within 6 months it'll definitely be a weekly show.
You know, it's funny. I saw this photo, but I only saw Tanner and how he like made fun of himself or something in the background of like how he looked weird.
That's funny. Oh wow. Yeah, that'll be interesting to watch the third one. You guys interviewed Dan Ives second, and then you guys interviewed
Did you guys see the end of the Dan Ives interview?
I didn't watch it yet. I'm gonna watch it this weekend.
Oh, it is so funny. It is so funny. Oh my God. I told Amit that I'm clipping it and turning it into a reel.
You should. You
should. Yeah, you should. You guys cross-plat? We on Instagram and TikTok as well?
I mean, I let Amit handle all that because I have no idea what I'm doing with any of that stuff. So.
Ooh, someone's saying you got out of the way over there.
Sorry, I just tried to be as quickly as I could.
No, it's all good. Yeah, so
Sam, what's the one company you're looking at right now you're really excited about?
If you say GitLab, I'm leaving.
No, I don't own GitLab anymore. I cut GitLab at like $47. It was probably that's like another one of those companies where it's like it's just been on a massive downtrend, and I had to cut it when I was coming back to retest the moving average. I forget which one, but I haven't looked back since, and I saved myself like 30-40% of losses by doing that. So, and that's why I cut That's why I cut Lemonade recently, and that's why I cut IREN. But IREN is well, I already have exposure to Nebius, but yeah, I might have a couple of other things that I want to cut. But one thing that I'm really bullish on is ACLS. Has to do with applied materials. They both are part of the same market, but ACLS is more concentrated in ion implantation, which is building machinery and services and parts for memory companies, but specifically DRAM companies like Micron, Samsung, SK Hynix, and all those companies. And we already know they're ramping up, and they report earnings on Tuesday. So I think that's going to be really good earnings. Pretty decent size in the portfolio right now with leverage too. So let's just say that if they SHIT the bed, then it's not going to be fun for me. But they are trading pretty cheap for how involved they are, and they've been doing pretty good. Like even on Semiconductor still continues to go up, and I've been long since 47. They're at like $71 right now, 72, and they have not experienced any pullback whatsoever. And that was because they're a lot in EVs and also in solar as well. They build the power chips and analog chips for those sectors along with AI data centers. And look, no one knows about these companies, but they trade very cheaply. And if you find the right one, like you'll suffer very little drawdown if you get in with size. And I'm in a few of those right now, right? So I don't think the market is too friendly with expensive pre-revenue companies at all. I think that's been the narrative. It was a narrative September into like April into September. But guys, since October 10th, like all those stocks topped. Basically, like pre-revenue stocks have a long ways to go to recover their highs, and the market is not sympathetic to them at all right now. Like I would really avoid pre-revenue companies on like hopes that something's going to happen versus like actual things that are in play right now in profitability. The market is very much not giving the premium to unprofitable companies anymore, and that has a lot to do with software. People got to remember that a lot of software companies out there are not profitable. Right? They're not. Like ServiceNow is one of the few profitable software companies, and so is CRM. But when you think about like MongoDB, Snowflake, Cloudflare, all these companies, they are not profitable. They are running a lot of SBC, which is putting a cap in their earnings. But on top of that, they have a lot of CapEx, but also they're running off the premium of their RPO. And that is not recognized revenue. That is revenue that is yet to be billed, and that can be pulled away from them anytime. And that's why the market doesn't believe Oracle. They don't believe that they're going to reach their RPO status that they've been giving like $400 billion in RPO because it's all from OpenAI. No one believes that story anymore, right? So, but yeah, anyways, picks and shovels for me. I'm focusing on picks and shovels. Any last words, guys, before we head out?
I'll say it's important what you said about GitLab and IREN, some of those other ones. It's important to know when things change, or even if something has a bad narrative problem. I was very bullish DraftKings for a long time going into like the end of last year, and I had to pivot. I had to pivot and get out of it, and it was tough. I almost became emotionally attached to it in a way, and so that was a tough one for me to like be like, this is not the thesis is not what it was in 2023 and 2024. It's just not there. So what you said, I thought it's very, very important to be able to pivot when the actual thesis or if the narrative is just bad enough for certain companies that it's not working to to cut it and move along. DraftKings is my example.
Swing trader, short-term trader, short-term investor, whatever it is, like this stuff matters. Long-term investor, like Steve, right? This price action is opportunity more than anything. But you're going to have to suffer drawdowns when they happen. And if you're not comfortable with those drawdowns, then you might have to question about your conviction on some of the holdings you have, right? So Mercado Libre is 30% from all-time highs. Could probably go lower, which I wouldn't argue that because it's not like it's a cheap stock. But from a long-term perspective, like, look, this is the Amazon of Latin America. They are not going anywhere. Amazon has business there, but they have stopped ramping up their business at a crazy rate when they realize Mercado Libre is really catching up, right? And also, let's not forget, Mercado Libre's infrastructure sits on AWS. So it's kind of a win for them too, right? There you go. Yeah, dude, Mercado Libre is very popular, and they just opened up a banking license in Argentina, which is one of the largest economies in South America. And if they become a bank, that is another tailwind for the company. So bullish Mercado Libre.
They basically have. And honestly, there was somebody that put out a report not too long ago. I'll see if I can dig it up and I'll send it to you. But if you look at all of the traditional, and this goes with my thesis that I'll share with you guys one of these times we get a chance, but the Nubank and Mercado Libre, both from the digital banking side of things, the like complaints per customer and like the overall customer satisfaction is like 12x any of the like legacy banks here. Like it's not even close.
Well, that's why Nubank is doing so well.
Correct. There's a Nubank. I'll try to take a picture here in a minute when I drive down the road. There's a Nubank billboard down here.
Yeah,
they're like growing in. Yeah, it's pretty cool.
They're expanding. Nubank's expanding very quickly in Mexico and Colombia right now, but Mexico is like a massive unbanked population out there. And you probably know more about this than I do. And we could definitely talk about Latin America stocks on another episode. But
that's the preview of my thesis right there. Is exactly that. So the same thing that people
you're living there,
yeah. So the same thing that people are saying about like the generational wealth transfer with Robinhood is what I'm seeing with banking in Latin America, specifically digital banking.
Yeah, because those, I guess we can touch on it more, but those legacy banks, they charge very high fees and they cater to a lot of the large net worth clients. And Nubank is taking a lot of that market share for them. And it doesn't take a lot of market share in order for Nubank to get bigger. Well, actually now it does. They're a much bigger company, but dude, Tanner was in Nubank since it was like $3-4. And I remember when it was $8 and I was like, oh, I'm late, but I'll just buy anyway. Right. And thing is like $16 now. And it's crazy because they're not even expensive either. I think they're trading at like 22 price to forward earnings for 2027 or less, actually. Like, dude, this is a company that's growing very rapidly. The scare is credit in South America, but that is a scare right now with a lot of stuff. But anyways, guys, appreciate you all being here. Evan, stock market news. I already shared you know what? Let me actually put the Wolf Financial YouTube on here. In case you guys want to check that out. I was saying earlier, Gav does a lot of interviews. Gav's the CEO of Wolf. He does a lot of interviews with like Peter Schiff, Tom Nash. Did one with Jose Najarro, the semiconductor guy. It's probably, I wouldn't be surprised if you're going to be on there too, Steve, soon.
I would love to.
You know,
I think that actually really cool.
Yeah, we should definitely do one with Steve as well.
Yeah.
So I'm going to throw.
AMAT was on there a little bit ago as well.
Yeah, that was actually a really good one. So this is the Wolf Financial YouTube on here. And then there's also a Wolf Trading too that Ryan does with Jordan, as well as Casey Trades, usually on a daily basis. I mean, okay, for you traders out there, I don't know if you know Ryan, but this guy is the most ridiculous NASDAQ futures trader I've ever met in my whole life. I mean, I've seen some pretty ridiculous stuff. Like this guy is just constantly making money on trades every single day. But if trading is your thing, definitely check them out. I mean, it's free stream. They do it every single day or almost every single day. And I'm going to put that on here as well.
What time do you guys do it?
Super chat.
Do it all day. All day.
I'm at the office. I need to know what time. I'm actually trying to freaking listen. I am trying to take days off just to trade. That's my goal for 2026 is to take your days off and learn how to trade.
Really? Wow.
I go live every morning at market open until market close. And then when a market closes, I usually jump on Stocks on Spaces with Evan. And then I pull up some stream with Amit and you guys. And I usually watch you guys, or I've watched you and Amit. I've watched Tanner stream a couple times. I find somebody stream where I can learn something once I'm done with mine for the day. That's my day.
Can you DM me on X? I want to get you on my channel to go through what you do and how you do it.
All right. We'll make it happen.
Awesome.
Investing world, and then you have a trading world. And I would probably say in like the last couple of years, like swing trading, which is where I'm more in, like has grown as well. And it's like there's traders out there who are like just looking at the charts and like no fundamentals at all. And M kind of understands some of the businesses that he trades. I mean, he mostly trades NASDAQ, but like the other stocks as well. Like understanding the fundamentals of the businesses that you trade is pretty important, because then you'll be able to know like things are coming up before like certain price levels are reached. I feel like that connection is pretty important. Like, I don't know. It's to have alpha in this market. I feel like you have to know how to read charts. Like I think it's very difficult to like outperform the S&P 500 on a consistent basis without knowing that. But like, you know, again, like long term, like there is no right way to do things. Whatever fits your personality the most. Hey, Finn Bear Chaz, appreciate the super chat. Yeah, take a look at ACLS, man. It trades at like 3 times EV sales. Like that's crazy for a company that's this important supply chain. But yeah, there are a lot of that stuff. Yeah, dude, head on there.
I see some of our crew. Jared's one of the ones that's in our chat all day.
I was going to say, I think I recognize that name.
David asked a question on here. Gav asked Jensen a question.
This?
Was it at CES? No, keep going down.
Duns? This guy?
No, it says David Cav. He said, was it Ryan that asked Jensen a question back end of last year? Gav asked a question to Jensen back at, was it CES 7?
Yeah, it was CES. I got Amit's question in there. He gave a nice one. I got a good answer. And then Gav's question got rejected. But he kind of got a job offer a little bit, maybe. I don't know. But was basically.
Yeah, that's what I thought we were getting absorbed by Nvidia. That's what I understood.
I kind of understand Gav's question. Like he wasn't looking for specifics, but like clearly because of legality and like he doesn't want to give away the juice. Like he didn't want to say anything about what they're looking at in the future. Because Gav's question was like, what do you think is like the next big thing besides, you know, like AI, autonomous vehicles, whatever. And Jensen's like, I ain't going to tell you, dude.
Market is closed on Monday. I see that question. Market is closed on Monday. Futures open up like normal on Sunday night into Monday, which could be spicy the way we close today.
Yeah, I was actually saying that usually when the futures are open, are the futures open on Monday during regular trading hours?
Until noon.
I was going to say, like, whenever that happens, the market does the opposite of what that day does. Like we've seen many times that day off, like the market's red, and then the next day it's green. Like when as soon as the futures open at like 6 p.m. Eastern that day. Like I've seen that happen so many times. Like it's a common occurrence all the time. But playing by probabilities, you know, if I wouldn't be surprised if we're red on Monday and then we just recover everything. So like people can't buy the dip.
I mean, that's the two arguments. The two arguments is like you're at the bottom of the range, the same bottom of the range that you've been bought up out of for the last 3.5 months. Is it different this time? Yeah. Maybe. I don't know. I'm not here to guess.
All right, guys. Appreciate you all being here. Everyone's YouTube profiles and Twitters are in the comment. Steve's going to be going live tonight with a guest. So you shall see who that guest is if you go on there with them. But yeah, Steve's going to be streaming tonight. Take care, guys. Have a good weekend. Stay safe. And don't stress out if you lost a lot of money this week. All right. Don't worry about it. Market always comes back at some point. We just don't know when. All right. Thank you. Bye.
Thanks, Sam.